All right, everyone. I hope you can hear me. Can you just give me a signal on the chat group? If you can hear me well. Very good. Thank you. Hey, good morning, America. I'm here from Dallas Forward, the USA again. Still here with our family members. And it's 7 a.m. in the morning here in Dallas. And good morning, good afternoon, good evening, the whole world. I'm so excited to be here with you at the start of the day here when the market is about to open in, I think, 2.5 hours from now. Yeah. And then, okay. And then, oh no, I think it's 1.5 hours from now. It's, no, 2.5 hours from now. Sorry for my mix up in the time zone here. I'm going to share with you a lot of trade ideas today, and probably I will ask you to give me some suggestions on the trades to use, the stock to be used with the trade lizard strategy that I introduced on the other day, 2 days ago, right? So again, see how many people now in the room. We have 1.5 thousand people in the room. Yes. So is that 1.5 hours from now? It's 7, 8:30. Yeah, 9:30. So sorry, my mix up. 1.5 hours from now, the market will open. Yeah, Faizan from Kashmir, India. Well, yeah, market was closed 3 hours earlier. That's correct. Hello from Dallas, Israel, Flores from India. Okay, from Gulam. Great to see many of you now in the room, and let us get started. All right, as usual, I will put up a disclaimer here because what I'm going to share with you later on today or from now on is purely based on my understanding of options, the way I trade options for many years, the way that worked very well for me. That doesn't guarantee that it will work perfectly for you as it worked for me. So please just do your own due diligence and take your own take your own risk, right? Because your hard-earned money. Just show you what I've been doing, and hopefully you could make money along the way. All right. So let's start it. So in today's agenda, I will start with sharing with you my daily routine, the trading routine. Normally, how do I start the day? When the market opens, I normally also spend the first 30 minutes to watch the market to get a sense of how the market momentum is going on and kind of having some idea on what is the direction that the market is heading to. And then after that, I will in that agenda, I will talk also briefly on the strategy that I taught on the other day, the trade lizard, JL for short. I'm so glad that I have received so many questions and interests about this strategy. Since I talked about this strategy on the webinar 2 days ago, I have seen people asking questions across the chat group and so emails. And yeah, you seem to have a lot of interest in this and very good questions you ask. For example, when the price is within the short call and the long call, how the trade behave, and then how do we take actions in that scenario? Like if it drop, will I get the shares assignment? Lots of questions like that. I think it's very valid questions, and please continue to send in. I have answers many of them, but if you have further questions, just throw it in the Q&A tab in the Zoom video there, right? So I will recap a few key points of trade lizard strategy from the optimal entry rules and also from exit rule and the exit rules that I had used from my trade lizard trades. And then when the market opens or before that, I would also start screening and analyzing some of the trades that I want to enter for today's session, right? From the P&L profile, the risk standpoint, the max profit, the return on investment, the probability of winning, and also show you how to execute the trades, not only on Thinkorswim platform. This time I will do it on IBKR as well, because I know many of you have migrated into the new platform there. And in fact, for most of my trade lizard trades, the 200 plus trades that I've done, I think 99% of them or 95% of them has been executed in IBKR, right? And you know the reason. I talked about that reason if you still recall. Two reasons actually. IBKR, for my IBKR accounts, I do have portfolio margin, right? So it will block me less buying power or margin, so that it will even boost the return on investment even better. And the second reason is, in this strategy, I would collect the premium upfront, which is cash, right? I collect cash upfront. The concept of selling insurance. Insurance companies sells insurance to you, and they collect cash in advance. Now, you know what? They just not sitting on your cash. They will invest. They will use your cash to invest to make more money. Same concept here. I sell these options in Jet Lizard. I collect premium upfront, and the cash that I collect would generate extra income for me, especially in this high interest rate environment. Yeah, the broker pays me 4.8+%. It's pretty good, right? When I'm waiting, I'm paid to wait. So that can only happen in IBKR, not in Thinkorswim, unfortunately. So that's why most of my trade will be done on IBKR, right? So that's how I would do. The next one, please also ask questions, right? Ask a lot of questions. I don't mind. Today is early for me, but I plan to stop on time, which is 2.5 hours from now, because I will join my sister on some of the charity events today, so we cannot be late. All right, so pardon me if I have to hard stop at 2.5 hours from now. All right, so let's start with my daily routine, right? My daily routine. So every day before the market opens, I have some, activities I need to do, right? So before the market opening, I will go through on the technical charts of not all the stocks in my watch list, but most of the important stocks that I love or I've been trading for many years. I go through the technical chart of those, and I see which one would be a good setup for a certain strategy, right? So for example, today, I plan to execute many Jet Lizard trades. So then I go through my watch list on the stocks that I'm having there, and have like 600 of them in my watch list. I will not go through 600, but the key one I will go through, and then I will see which one will be suitable for the Jet Lizard strategy, right? And if any of those meets the criteria of Jet Lizard setup, then I will start simulating it and see if it's like giving me a good trade potentials in terms of risk, reward, return on investments, and probability of winning, right? So for example, right now, before now, I already started simulating some of the Jet Lizard trades, and I put in the working orders here. So I have a list of Jet Lizard potential trades for today. So I have simulated it like 2 hours yesterday, and then I kind of check on the criteria, and then I could go back and then explore and reanalyze it when the market opens to see if those trades are still valid, right? If it is, then I will enter the trade. So that's how I do every day. And then I will read some key headlines, some news, right? I do not read a lot during the day, but before the market opens, I just read a few bits of news. So how do I do it? Well, if you know me, I used to subscribe to the Business Insider, the top 10 things you need to know before the market opens, right? But now I think they discontinued that one. Then I subscribe to the top 5 things you need to know before the opening bell or something, right? It's very simple. So every day they push the email to my inbox. So I open it, I watch, is there any significant news inside before the market opens? If there's anything, then I click into the link and I read through the details. Otherwise, I just ignore it. Normally, I just spend like 5 minutes or less in reading the news. And that's it. That gives me some idea of, is there any big news going on that could affect the market, right? Otherwise, business as usual. Right. So after the market has opened, I will sit tight for the first 30 minutes. Yeah. This is maybe started many years ago. I read somewhere some study when they have all the data showing that most of the time, the first 30 minutes, only amateurs traders trading together. The pro won't come in after 30 minutes, right? And the market normally would be very jittery during the first 30 minutes. At times, it doesn't know where it wants to go, right? Up or down or sideways. But after 30 minutes, the market direction is pretty much set, right? If it's up, then the whole day will be up. It's rarely happen when the market goes up strongly and then suddenly reverse to the downside during the day. More often than not, after half an hour, if the market is up, it will be up for the day. Like yesterday, since opening, it like volatile, right? And then after 30 minutes, it said that the market wants to go higher, and it went on the way up and closed higher. So that's what happened. So I don't normally trade in the first 30 minutes. I want to sense the market directions and sentiment across the markets like equities, treasury, so bond and yield, and then gold, and then oil, and then other commodities. Yeah, so those are the key markets that I watch. Forex nowadays, I do not trade a lot of Forex, so I don't look at Forex nowadays very often. So just have a sentiment to see the behavior of the markets, the rotation, what sectors are doing well, what sectors are not doing well, right? So have a sense so that we can go with the momentum of the market. Also, you know that I use the Excel file to consolidate all my trades across my 5 accounts. And I have accounts across platform, Thinkorswim, Interactive Brokers, and Tasty Trade. So the only way for me to monitor everything is using Excel file. And I just type in all my trades within that Excel file, and it links to the Thinkorswim platform. So when the market price changes, my Excel file also get updated live. So I know what trades are doing well, what trades need some action, what trades need to be cut for loss or closed for profit. And I would take necessary actions, because at every point in time, I have something like 200 trades opened going on. Me alone, I cannot do it without this Excel file, right? Because there's no way for me to jump in and then hopping around different accounts to see which one is which. And no way, even within one account, I have, for example, Google, I have so many positions. Within that Google, I don't know which one is which this leg belongs to what. Especially in IBKR, once you roll some options, it could be broken. So the spread or the combo get separated, and there's no way for you to regroup it. So once it gets separated, it's so hard to monitor. You don't know which leg belongs to what trade. The only way for me to monitor it is the only way for me to monitor the trades are based on the Excel file. Yeah. So so that's how I watch my trades using the Excel tracker. And then, you know, I also running different portfolios, and I do have the OTT community, which is Option Tactics Playbook, which I will talk a little bit later at the end, where I have community members and have open trades there, and I need to attend to those trades and take actions when the trade hits a certain threshold, right? Is that the profit, is that loss, or is that like we need to roll because it's expired? So those kinds of actions I need to do. Similarly, I have WOW trades, which is Well Academy Option Masterclass trade. So every year I run 3 rounds of live trading with my masterclass students. This is the highest level of options that we ever provide here in this community, where I teach live throughout, right? And then I have the monthly gathering with my students or graduates. And every month I enter new trades, I monitor own trades, I manage the trades throughout until it closes. And because I continue to accumulate many trades over the time, there's a big portfolio there as well. And I keep also managing the trades, and I need to inform my WOW students or graduates on how and what to do with the trades. So I do have different portfolios, and that would be that keep me quite busy with actions. So and then once in a while, like this avenue where I have trades. So I have the trade in 6 wave events. I also need to update you. I have the trades there in the trade, the live trade hunt. I think on October 4th, that also need to be taken care of. And today I will enter new trades as well. So I will also update you along the way until the trades are closed. Right. So a lot of different portfolios I need to manage, and have Chin, one of the community member who volunteer and help me keep track of those trades and actions that need to be taken. So thank you, Chin, again for his volunteer effort, right? And then after the market opening, still within the 30 minutes, I would also check the validity of the trade that I have pre-simulated. So for example, the one I just showed you, right? So this one, I already pre-simulated before the market opens. But now the market has opened, then I will re-simulate it to see if I need to make any adjustment to those trades or not, or it's still good to go. If it's not, then I just skip the trades, right? So that's how I do in the first 30 minutes. Lots of things I need to do within the 30 minutes. So I don't even take a trade, but I still have a lot of activities before I enter any new trades, right? And then after 30 minutes, I start taking action, sometimes very busy with like fast and furious kinds of action across portfolios, WOW trade, OTP trade, live trade hunt, and 6 wave. And you know, people keep asking questions, Bang, what do I do with this trade? What do I do with that trade? Sometimes I'm a little bit confused, and then Chin remind me this one is what, right? And I do have the Excel file when I also note out this one belongs to OTP, this one belongs to WOW, and this one belongs to a bigger community. So normally can identify what trade people are talking about. Most often I see people asking me questions in the wrong groups, right? So for example, some trades are done in the 6 wave, but you ask me in the WOW community, or some OTP trade people ask me in the bigger group. So please also note down for yourself what trade belongs to what event, so that when you ask me, it's easier for me to relate to what trades you are talking about. And it saved my time also, so without me guessing what is what, right? All right, so, and then I normally sit through the day until 2 p.m. 2 a.m. in the mornings in Singapore. It used to be 1 a.m., but then because the time zone changed, so I normally end the day at 2 a.m. in the morning in Singapore, and then I sign off from there. Yeah, and then the day after, luckily now I'm retired. I don't have to rush for the office. I catch up some works in the company anymore, so I can afford waking up a little bit late, and that's where I will record all the trades, on the rolling actions, on everything that I did the day before or the night before across the accounts, and I put all together in the Excel trackers, because that is a tool for me to keep track with my trades. So sometimes I spend the whole morning just updating the trades in the Excel file. And also for OTP community, I also need to I need to officially notify community on the trades that I did the day before. So the day before, it's kinds of fast actions when I post the screenshot, say this is what I'm doing, or this is what has been taken. But the day after, I need to formalize it, right? I need to send out notification in a proper structure setup so people can make sure people don't miss it, right? And that will be in the record as well. So that's normally how I do. And then in the afternoon or before the market opens again, I will start simulating new trades for the new day, right? Now, the good thing is now I have full day after the market closed without having to work for anybody. So I have more time to do my work without rushing, and therefore it make my life a little bit easier than before, right? So now you can understand why I decided to retire, because otherwise it will be very difficult for me. Yeah. Yeah. Any quick questions before I move on? Okay. Some questions already on unequal with iron condor. Okay, maybe the thing you fit in my Google document here with some of the questions you're asking. What is the Well Academy Options Masterclass? This is a high level of option training that we have in our school here, the Piranha Profits School, right? The Well Academy class, a Well Academy option trading class is the live trading from me via the Zoom video. And I teach it over 7 sessions, plus one from Coach YY, so 8 sessions in total, where we teach live from the zero up, right? From the scratch until the advanced level. I cover most of the advanced strategies as well, and also the basic part of the option. So if you're really interested in it, just write to the support team. This is something that's the highest level of options training if you really want to join in, right? Okay, so Ian Tao, you say how you pre-simulate the trades. The way I say I pre-simulate the trade is when the market is still open right now, I already started putting together some of the trades. For example, I have the list of the trade lizard trades I want to enter today, 3-legged each, right? And I simulated this one before the market opens, so that so because of that, I need to use the market data at the close of yesterday. Right? I use the market data at the close of yesterday. So things can change. So when the market opens today, the data will change, the pricing, the strike prices will not be valid anymore. So I need to re-simulate the trades, but at least I keep the trade ideas there. So that's what I call it, pre-simulate the trade, right? Okay, how much is the cost for the Well Academy? Please just reach out to the team, the email. So I don't remember at hand here. Can show example of Excel trade. How do you use it for IBKR? So recently, Coach Richard developed Excel file that works with IBKR, right? I have tested it. It works fine. Not as smooth as the one that I have for Thinkorswim, but it works, right? So I think he had already shared in the community group. Just reach out or search in the announcement or something. He posted it there. Yeah. Yeah. So option tracker, Excel tracker is part of the curriculum. That one works for IBKR and also Thinkorswim. I think we posted it in the curriculum, right? If you could not find it, just ask question on the chat group. It's there. So we have both trackers for Thinkorswim and for IBKR. Can IBKR simulate trades? Of course. Today, that's what I say, right? I will simulate trade lizard trades in both Thinkorswim and IBKR. So you will see how I do it. Now, if you want to know how to simulate trades on IBKR for other strategies, watch the 4th set of videos that I released, I think about 3 weeks ago, right? I recorded 4 videos to cover all strategies using IBKR. So you can simulate trades on IBKR as well. What is OTP? Option Tactics Playbook. That is my subscription business where I do all the trade analysis and I post it in the community, and members will get to know what is the detail of the trade, the setup, risk profile. If they like it, they follow my trade. And it's not just opening, it also monitoring and taking action along the way until the trades are closed. So that is the service that I have there. I will talk a little bit on some special offer also. We have very special offer on OTP towards the end of today's session. All right. How to do, okay, Sherin asked how can you show how to do the booking order, like your screen currently on IBKR. IBKR, you can do simulation and you send the order out, but don't send at the market price or mark price. Just send at the, for example, this one is a credit spread, right? You want to collect for $4 per trade. Don't put $4, put $40 or put $14. Your order won't be filled, but it will be shown up in the working orders, right? And when the market opens, you just go back and renegotiate the price. The platform I just showed is based on Thinkorswim, right? For those who don't know, this is the Thinkorswim platform. But later on, I will simulate the trades on IBKR as well. All right, just a few more questions before I move on. Otherwise, it becomes too late. Okay, Ming Nguyen asked where I can watch your videos. It's in the, once you sign up on the option mastery package, the videos are there. The videos is in the option mastery package curriculum. Okay, so if you, okay, so lots of questions on the admin thing. I think my admin team and the coaches will answer that. I will answer only questions that people ask me on the trade itself, right? On the admin, I let the expert answer those questions. Okay, let's just move on. Now let's just now go hunting. It's 1 hour, just 1 hour before the market opens here. Okay, so now we go hunting together. So what do we need? We need to know what animals you want to hunt today, right? And who are the targets, right? What animals are the target? Is that an exotic bear? No, right? Because we are not in the bear market. We are not going to hunt any bear today. Jade lizard is a slightly bullish strategy, neutral to bullish strategies. It's not about the bearish strategy. So definitely we're not hunting for the bear today. Yeah. Is that the raging bull, right? The crouching bull? Not necessary, right? Crouching bull was last year black market. So we introduced that crouching bull strategy last year, and it have done very well, right? For myself, for lots of community members. But that's not what we're targeting today, right? Raging bull means you are super bullish, right? If you are super bullish on a certain stock, you use crouching bull, right? The target today is the nimble lizard or jade lizard. That's what we are targeting today. It's not like a long dated option, but it's a short, fast in, fast out, very nimble, right? You enter the trade, you exit within 2 weeks, and you got the money and run. Sometimes, so I show you the exit rule later, right? You hit the 50% of the max profit target, run, release the buying power or margin for new trades, keep collecting premium, and then lock in the profit, and you have very high chance of making profit, right? In fact, I share on the other day, I have 87% chance. That's actual probability, 87% probability of winning rate, right? So you have very high probability of winning, very nimble, get in, get out, fast moving out, right? That's how it works. So we will target the jade lizard today. What's the weapon we are going to use? Yeah, of course, the strategy that I taught 2 days ago on the jade lizard. And just make sure you have enough ammunition and bullets ready for the hunting, right? And the good news is if you have the margin account, this kind of trade won't block a lot of capital. I know some of you asked me that, hey, when you simulate a similar trade that I did on the other day, it blocked like $10,000. And then in that case, probably because your account doesn't have the appropriate trading permits. You need to ask for the highest trading permit with the margin account to be able to optimize your capital uses. Otherwise, it doesn't make sense to trade trade result, right? You need a margin account, and you need the highest trading permission. All right, just now recap of the trade result strategy that I talked 2 days ago. Ideally, trade result is used on fundamentally good stocks, right, that are undervalued. The reason why I put this one first, because you have to plan for the worst case. In any trade, before you enter, you need to plan for the worst case scenario, not the best case scenario. The best case scenario, the profit, it will take care of itself, right? You need to take care of the risk. That's its most important thing. So need to plan what happens if the supply collapses, right? What is the risk, right? So that is always the first thing I need to look at the trade. How much I could lose in this trade? Can I afford it? And therefore, in this particular trade, you have no protection on the downside. No protection on the downside. That's why you need to enter the trade on good stocks. The stock with solid fundamentals, and that is still undervalued, because in the worst case scenario, you may need to buy in the shares. You get assigned the shares and you need to hold. And for good stocks that are undervalued, it's just a matter of time. The stock price will recover and you get back on the losses, right? You recuperate on the losses and turn around the trade. So that's important, that you need to do this one on good stocks that are still undervalued. So therefore, avoid doing this on speculative stocks, the stock that has a good chance of being collapsed, right? I usually don't do this on highly speculative stocks like, for example, Roku, things like that, right? When I tested it, this one over the past 6 months, I tested it across the board. I tested it with speculative stocks and good fundamentally good stocks as well. But the big hits that I normally got was on speculative stocks. So since then, you know, among the big losses that I have, I get burned on, I think, one on a Coinbase, right? For Coinbase, and when it dropped down, it's not even earning. It's some announcement from SEC or something, and then it dropped big and I cut loss. So then the point here is just avoid those speculative stocks, unless you are very comfortable with owning the shares. Because for me, I'm not comfortable owning Coinbase, but I know that some other people may see Coinbase is a very solid stock, very good fundamentals, and it could be a multi-baggers. It's fine. In that case, go with your thesis, right? So up to you. It's not like what I avoid, you would avoid. No, it's up to you. If I'm not convinced on something, you need to ask yourself, are you comfortable with owning that share? If the answer is yes, please go ahead, right? So just make sure that you understand that don't follow my trade blindly. Yeah, you have to have your own setups and your own thesis. That is from the fundamental standpoint. From the technical setup, this trade would work very well if the supply goes sideways, slightly up, or slightly down. So basically, if the stock price moves in a range, this trade would be doing very good. And the profit zone is very wide. So if the stock price drop like few points, it doesn't matter. It goes up few points, it doesn't matter. The best thing is if it goes up a lot, you would still be profitable in the trade anyway. There's no risk on the upside. The only risk is on the downside if the stock price collapses. And that's what you need to take care of, right? So, and when you look at the technical chart, you need to be comfortable with the setup, meaning the supply has stopped declining and now it's like consolidating. That would be the best scenario. Or maybe it due for a rebound. That's one so good, right? At least look at the chart. It's not like one straight line going down and it doesn't seem to have stopped, right? That one I would avoid. Don't enter the trade that the supply has dropped so much and it shows no sign of stopping. it continued to go lower. And on the other day, I talked about some good stock, but that kept going down, like Hershey, like Estee Lauder, right? Good stocks, undervalued, but the technical setup was terrible. Yeah, so now Hershey is getting better. It's already, I think, have found the bottom. So could be a good candidate. But there was time when the chart told you that, hey, I have not stopped going down, so don't touch me. So guys have set up. DTE, date to expiration, within 4 weeks to 6 weeks. So about a month or 1 month and a half, that would be good, right? Anywhere between 4 and 6 weeks, that is the most optimal entry time, right? I tested it with shorter DTE and longer DTE, and I found out that the sweet spot of this strategy is within 4 weeks to 6 weeks, because that is the time frame when the time decay would start accelerating. And you want to enter the trade as a credit spread, and the time decay accelerates. That means your trade would generate the profit pretty fast. So that's where I picked 4 to 6 weeks as an optimal entry time. Again, 3 legs on the trade. Leg number 1, you sell 25 delta. Hold on, I just pull up the drawing tool here. All right, so let me repeat the 3 legs of the trade. Leg number 1, sell short shell or put option below the current stock price. Ideally, the delta should be around 25 delta or lower. The lower, the safer, right? Because then you have a wide margin of errors in case the supply falls after you enter the trade, right? So I prefer at least 25, or better if you can sell lower delta, because you put the put further out, because you don't have the protection on the downside. You need to take care of that part, that side of the trade. So delta 25 or lower for the short put. For the short call, you can, I mean, the optimal one would be selling 45 delta, which is above the current stock price, out of the money call. Yeah, you collect that premium, and normally the 45 delta, you can collect a pretty good premium, because it's just slightly out of the money. But then if you only sell the call, then you would expose yourself to unlimited risk. Therefore, you need to buy another long call. Yeah, another call to cap the upside risks. Now, the long call will not be depend on the delta. It will depend on the credit spread, the credit that you could collect from the entire 3 legs. So the long call will be determined only when you kind of try and error. So you pick one call, and then you see how much credit, how much premium you can collect, and would that be higher than the spread or the width of the short call and the long call, right? So the credit that you receive from the trade needs to be equal or higher than the width, the distance between the long call and the short call, right? So you just need to pick one of the few long call above the short, and you will choose the one that meets that criteria. Yeah, I will show you later on when we simulate the trade. And then the credit that you receive there needs to be generating at least 10% return on investment in the best case scenario, right? If you collect $4 or $400 per contract, the broker needs to block you less than $4,000 for capital, right? So then the max profit, which is $400, would translate into more than 10% return on investment, right? If the trade has very little premium, but the broker blocks you more, and it results in less than 10% return on investment, skip that one, right? So I have a few trades that I simulated earlier. everything looks good from the fundamental, from the technical, but then when I send it out, the broker blocked me more capital than it should be. So and it brings down the return on investment. So then I would skip those trades, right? So along the way, when I ask you to suggest some of the trade ideas, I will simulate, and if any of the trade blocks block more capital, that it result in less than 10% return on investment, then I would skip it. Or to make it simple, right? If the broker blocks more than 10 times of the credit that you receive, yeah. If the broker blocks more than 10 times of margin, then the credit that you receive, then ignore that trade. In this result trade, typically you would have a break-even point very far away from the current stock price. Often you see the break-even point is about at 1 standard deviation strike price, which means that the trade should have at least 70% chance of winning. Most of my trades, the trade result trades, I have 80% chance of winning. In theory, when I simulate the trade. In reality, I show you the data on the other day, right? I have 87% actual probability of winning. So actual win rate for me is 87%. But when I simulate the trades, most of the time I got like close to 80%. So 70% probability of winning is minimum. If it has less than 70% of probability of winning, don't take the trade. All right, let's go hunting. Let's go hunting. How many minutes? Okay, 45 minutes from now, the market will open. So we have time for simulating the trades right now, right? And then when the market opens, I need to recheck the trades again, right? So let me start with the 3 trade ideas that I talked about 2 days ago. And actually, I picked only 2. The third one no longer valid, which I will show you why it's no longer valid. All right, so the first one was Nike. Remember, Nike, let's start with that, right? From the fundamental to the technical standpoint, right? So let me go to Thinkorswim here, and I will go to IBKR later. So let me start with the chart of Nike here. Now, fundamentally, Nike is a fundamentally good stock, very solid. I use a lot of Nike products when I play tennis, right? So, and now I'm in the US here, people using Nike a lot, right? My cousin, my niece, and lots of boys and girls here are using Nike. Look like Nike have very good brand image and franchise in the US here and outside also, right? So fundamentally, this is a good stock that is very profitable, generating cash and growing. Now, fundamentally, I mean, from the stock valuation standpoint, my valuation for the stock is about $118 per share. Right now, the stock price is at 106. So clearly, it is undervalued. Yes, it has gone up over the past 2 months or so since it troughed, and the earning was so good, it popped up and it reversed the trend to the uptrend now on the short-term basis, right? And it's undervalued, right? From the low at 88 here to now 106, still it is undervalued. So from the fundamentalists, from the fundamental standpoint, it's a good stock. It's undervalued. So obviously, this is a stock that I feel very comfortable of owning. Yeah, of owning, especially at this price, or if even better at a lower price, which you could if the stock price drops from here, if you are in the Lisa trade. All right, so 106 still undervalued and good stock to own. That's from the fundamental. Now, technical standpoint, obviously, the stock has bottomed. The stock has bottomed in late September, right? And now it has reversed to the upside. So clearly on the short-term setup, it is now on the bullish side. it have the higher high, right? It have a higher highs and higher lows. Yeah, a very typical pattern of bullish trend: higher highs, higher lows. So obviously it's on the short-term uptrend here. Now it could face some of the resistance at the 200 moving average, where it failed to break in the past, right? So now the 200 moving average is around the corner here. So the stock could move up a little bit and then face that resistance, and it could fail or it could succeed, right? We don't know. But again, the chain lizard trade doesn't have the upside risk, so it doesn't matter if it breaks out or not. If it doesn't break out, it's even better. So if it doesn't break out, it fell down and then consolidate at this level, and that would be the best scenario for chain lizard. So fundamental is good and technical is solid. All right, so check the box. Fundamental, technical, both are fine. Right. So that is the checklist that I'm going through here. Now let's go to the option chain for Thinkorswim first, and I go to IBKR later to simulate if I could have a good potential trades here. Now, within this time frame, I have different DTE or date to expiration to choose, and the optimal entry time would be 4 weeks to 6 weeks. 4 weeks is 28 days. So anything more than 28, that is it. And 6 weeks, right? Is that 6 weeks? Yeah, that will be 42 days. So then I can choose either 31 days or 38 days. Either of them is fine. Yeah. 30, the time decays will be faster, and then the trade would generate profit faster. But the trade-off of the 31 days is the profit zone could be a little bit narrower. If you choose 38 days, the profit zone could be wider. But then the time decay will be a little bit slower at the beginning, right? So between the two, either of them is fine. Let me just pick 38 days, right? Which is less than 6 weeks from now. All right, so now 3 legs. What are the 3 legs? First leg is on the put side. And then go to the delta column. Choose 25 delta, which is this one, or lower, right? 25 delta or lower. So that translates into the strike price of 100. So I need to sell one contract here. Yeah, sell the put at 25 delta. Leg number 2, I will need to sell a call option out of the money above the current stock price, and ideally at 45 delta or lower. Now I don't have the exact 45 delta here. Either I need to choose 47 or 43, right? So either of them. 47 means I collect a little bit more premium, right? It's okay, a little bit more than 45. That means it's easier for the price to go beyond my short call strike. But that's okay because the trade doesn't have the risk on the upside. Even if it goes beyond the short strike price, the trade won't lose money, won't lose any money. Some of you was asking me about, well, in that case, would I be assigned the short shares? I tell you, it's very unlikely, right? Very unlikely, unless the price moves up a lot and there's no more extrinsic value in the short call, then you could be. But even in that scenario, it's not a risk. It's not a risk. That is actually a good news because you can collect on the remaining extrinsic value at once. You don't have to wait until the expiration. So in that case, you just buy to close the shares and then close the remaining legs, and you could potentially get more than maximum profit, right? Don't be afraid of being assigned. If you are in the mastery community, the option trading mastery community, you know, I have the videos out there which addresses all kinds of scenario of assignments, and most of the time assignment is a good news, is a piece of good news, right? You don't have to worry about the assignment at all, right? When you don't know about the assignment, you feel very afraid or scared. And that's where I used to be, right? I used to be scared of being assigned as well. But after many years of trading option, actually, I like being assigned because that means I can collect the remaining value in the trade ahead of time, right? Don't be afraid of that. So in this case, I would sell 47. And then this long call, so 47 means I need to sell 108 call option, right? And then whether I need to buy 110 or 111, I need to simulate different trade to see which one would be the optimal one. All right, so let me go and simulate the trade right here. Sell this one, click on the bid, right? Click on the bid here. And then hold the control key, sell the call. So click into the bid again, right? So 2 legs, when I sell here, I collect 5.16, but I need to buy a higher call to cap the upside risk. Now I can simulate different higher strike. Like let's say if I don't know, I just buy 110. If I buy 110, what do I see here? I will collect $2.57. And that obviously more than the $2 spread between the long call and the short call. So this is good. This is good, but it's not the best. It's not the optimal one. Let me show you the chart of this one first, and I come back and I will explain to you why it's not the best, right? So if you go with this, and then you analyze the chart of this trade, what do you see there? It looks fine. It looks perfectly fine, right? Where's the break-even point? Set slices. So the break-even point is at about 97.4. And this time, December 29. So I move this one to December 30th. So that's correct. So this trade, you have 85% chance of winning, right? 85% chance of very high probability of winning in this trade. Now, the max profit in this trade is the $257. So if the stock price stays within the short put and the short call, 108 here, 108 short call here, which is this. So if the stock price stays within the 2 short options, that is where you get the max profit, which is $257. Yeah. High probability of winning, decent profit, but I need to check this profit would translate into what kinds of return on investment. That needs to be calculated as well. No risk on the upside. In fact, if the stock price goes higher, you would still make some profit here, right? So it's good. No risk on the upside. Decent break-even point when it drops below 97.4, right? So if I do the math, I need to see how much the broker will block me for this trade when I send it out. So send, confirm and send. It will block me 1,604. So 1,604. That is the margin. That is the buying power. So you do the math on the max return on investment, 257 over 1,604. What do you have? 257 divided by 1,604. 16%. 16%. All right, so you have 16% there, and 16% is more than 10%. So that meets the criteria also, right? You need to have at least 10% or greater. So 16% is decent. So it's a decent trade. This decent trade. Now, I keep the data there, but now I change the short the long call from 110 to 111, and you see the difference. I change this one to a higher strike. What do you see now in this new trade? I would collect more premium, which is 303, and the 303 is also greater than the $3 here. So it also meets the criteria of the credit being greater than the spread, the width of the long call and the short call. So this one also meets that criteria. So this one also a good trade. Now, I need to recalculate the return on investment in this case. So look at the P&L chart first on this trade. What you have, first of all, you notice that I have a lower break-even point because this trade I would collect more premium, and that create extra margin for error for the trade. So this trade I would have more buffer on the downside. So the old trade I have 85% chance of winning, right? Now the new trade, if I move the vertical line here to the new break-even point, you see that? Now I have a little bit better. So I have 86.5%. So better probability of winning because the profit zone is now wider. The profit zone is now wider. So I have a better probability of winning. That's number one. I collect more premium. So that means I have a better max profit. So max profit for me in this one is 303. And how much is the buying power? If I send this order out, I send it out, it will block me 1658. So if I do the math, divided by 1658. What is the maximum return on investment? 303 divided by 1658. 18.3%. 18.3%. So obviously the second trade that I'm simulating now has a wider profit zone, hence the better probability of winning. And because I also collect more premium, it translates into a better return on investment in the best case scenario, right? So I have a better return on investments as well. What is the trade-off? Well, the trade-off is if the stock price moves so much higher, I would make a little bit less profit when it moves too much higher as compared to the old one. But that's fine. Instead of making like $50, $30, something like that, it's okay. But that is a very extreme scenario. So between the two trades, you ask me, I prefer the second one. I always go for the higher credit as long as it doesn't violate this rule. It doesn't, it's greater than the spread between the long call and the short call. So I go as much as I could in terms of potential credits that I get, as long as it's not violating the rule of the spread. So I prefer the second one, yeah, the bigger credit. And therefore, I could get a better return on investment. And I have the lower break-even point, meaning I have a wider profit zone and a higher probability of winning as well. Yeah, lots of better benefit, maybe slightly better, but it's okay. I like the optimized kind of trade. So the second one for me is the better one versus the first one. But if you like the first one, go ahead, right? Because both trades are meeting the criteria for the entry. Yeah. So this one is good. And normally, because the market has not opened, right? The market has not opened until 9:30 in New York. So that means another half an hour, right? So somebody asked me, how do I pre-simulate the trade? This is what I'm pre-simulating the trade here. And the market price telling me that I could collect 3.03. But when I pre-simulate the trade, I don't want to set the price at the market price. I will set the price at the price that it won't be filled because it's so much better than the market price because in my favor. So instead of putting 303, right, I will put 13.3. So I would collect 13.03 instead of 3.03. This one, this order, when I send out, it won't be filled, right? Because it's just too good to be true. But that is the intent. I should put it as a placeholder for now. Placeholder. When the market reopens or opens, I will check again the credit to see if I could still get 3.03 or not. I don't want to put 3.03 here, and then when the market opens and the stock price gaps down, and I could have got it at 310 or 320, then I left some money on the table, no? So I don't want that to happen. So I put 13.03 to be safe. Send it out and confirm. Now that orders. Now this order is now on the queue here. The first one. Yeah. But later on, when the market opens, I will change the price. So this is a good one. Now I pause here to see if you have any reactions or any questions on the trade before I move on. Small risk on the upside? No risk on the upside. The trade I just show you, no risk on the upside. Yeah. How to come to the P&L chart? Well, in Thinkorswim, you will see it under, if you're not familiar with Thinkorswim or TD Ameritrade, you just go to the Analyze tab, and then or you can do the trade and then right click and choose the Analyze the trade. And then it pop up this one. So that is on Thinkorswim, right? This is the old trade. The new trade is this one, 111. Yeah. And then set slices to find the break-even point. Yeah. So that's a new break. The no risk on the upside, you can see here. If supply goes up, you could still make some money, small money. Now you will simulate the trade on IDKR later. When to cut loss, I will talk later. 2 days ago, I also mentioned the exit point, right? In what scenario you will do what action? That one I will talk later. Andrew, you say in what scenario will we lose? We will lose. Well, obviously, you look at the chart, right? The zero line is the zero profit or loss. Whenever the line drops below the zero line, that is a loss zone. So I have the loss zone here, between here and here. That is on expiration date. On expiration date, if the price falls below this break-even point, 96.97, that will be a losing zone. So the trade could lose a lot. And the max loss would be when the Nike share price drops to zero and stays there until the expiration, which is theoretical and not going to happen in the next month or so, right? But if you just enter the trade and the supply already falls, yeah, then you follow the pink curve here. And you see that you could start losing money already, even when the supply doesn't drop below this level yet. You will start losing some money already. But the pink curve will not be the same every day. It will move, right? So same scenario. What if I enter the trade and a week from now, the supply starts falling, or 2 weeks from now, it will start falling. 2 weeks from now is here. Then it needs to fall below this level. Yeah, from here on, I will be losing money. But if it only dropped to here, I will still be profitable here. Yeah, that's still making money here. So really, it really depends on how long you've been in a trade. The best scenario is you've been in a trade and the first 2 weeks, the supply doesn't move anywhere or just moving up, down a little bit. That would be the best. Because after that, if the supply drops, it still be okay, right? So for example, if it's 2 weeks, if I move it 3 weeks from now, 3 weeks from now, that will be December 12th. You see, if the supply stays here, you would be making good money. If it goes up, you're still making money as well. If it drops to here, you would still making some money here. Only when it drops a lot below this point, then you'll be losing money. This is a loss, yeah? And if you keep until the expiration, this is the blue curve, right? It needs to drop below this break-even point on the expiration date, which is December 29. So you see, depends on how long you've been in the trade. The loss zone can be wide or can be narrow, right? At the expiration, the loss zone will be very narrow, right? So 3 weeks from now, if the price stays at the current level, you look at here. If the price stays within this entry level here in 3 weeks' time, your probability of winning will increase to 95%, because there's only 5% chance that the stock price could drop below this point when the time is running up, right? So the longer you hold, the longer you're in the trade and the price doesn't move, the better the probability of winning the trade will be. Yeah, that's a very typical nature of the trade is a trade. Any other question before I move on to IBKR? So that's, Megan, how I open the chart. Just simulate the trade on the option chain and right click and analyze the trade, and you see that chart. Yeah. And in the curriculum, if you're not there, you see in every single strategy, Adam and me show how to analyze a trade. And that technique or simulation or navigation on the platform will be reinforced every single lesson. You can continue to see a lot of example of this. Minus expensive broker cost. For me, I don't have an expensive broker cost. I think if you use Thinkorswim, it's like 60 cents, 65 cents. I got 40 cents because I trade in high volume. I negotiated with them successfully. And by the way, in the curriculum, I also give some tips on how to negotiate with the brokers. IBKR, I think they charge a flat rate, I think 0.7 or 0.7, which is 70 cents per leg. It's not expensive, in my opinion. Andrew, you say 101.5. Will ever what is it? Will we ever get assigned or required to sell some shares? 101.5. What is it? 101.5. No. So if the share price drop to 101.5 here, 99.99% chance that the short put won't be assigned because it's still out of the money. And it will be a stupid thing that the put buyer would do is to exercise his option. No one would want to exercise out of the money option because he or she will lose value immediately. And his loss will be your profit. If it happens, you should be celebrating, having barbecue and beers, because it's the best scenario that could happen to you. Again, don't be afraid of assignment, please. If you are not familiar with options and in the community, don't have to worry about the assignment. I tell you, assignment is a good thing, not a bad thing, okay? All right, so let me move on and simulate the same trade on IBKR because lots of you are using IBKR. So notice that the trade that I'm looking at is 110, 111, and 108 and 11. But I will show you on IBKR. I will show you step by step as well. The market has not opened yet, so don't look at the P&L here. It's still very wonky for the day. All right, so let me go to the IBKR and let me maybe delete or hide this trade. All right. Right, so IBKR, you want to simulate the trade, you open the new what if. Do you know how to do it? Just go to the new window here and then open the option analysis. Yeah, option analysis, and then go on. Sorry, no, not this one. The portfolio tools, and then go to risk navigator and open the new what if. Okay, it will open up this one. Now, once it opens, right, you can enter the new stock here, Nike, and then choose options, right? And then choose the DT you want to trade. So in this case, that is on December 29, right? December 29, so you do 3 legs. Leg number 1, you sell a put option at 25 delta. Here's the delta column. You see the delta column here. Go to the 25 delta. There's a 25 delta. There's no exact 25. You know, between Thinkorswim and IBKR, they have a slightly difference in terms of the simulation because they are using different option pricing models. I think Thinkorswim use Blackstone something, and IBKR, they use Blackstone's model. So 2 different pricing models that generates some slight difference between delta, gamma, even volatility. But it's very close enough. But in terms of the premium you can collect, it should be the same. When the market opens, the pricing would be the same across brokers' platforms, right? You don't have to worry about that. So now there's no exact 25 here, but 26 is close enough. So I will sell both option here. So the first leg. Leg number 2, I will go and sell 45 delta. There's no 45, that's 46. In IBKR, it shows 47. This 46, that's fine. So sell, click on the bid, right? And finally, I buy 111 this one. So that's 3 legs. Now here's the 3 legs. You need to enter the quantity for the chart to come out, right? So the put, I will type -1, which is 1 contract. The 108 call, I type -1, which is to sell another call. And then third one, buy a higher call to protect. So that is a 3 legs order here. Click on the plus side to open on the legs of, okay, hi, this Google. Just look at the Nike, right? Now, in this chart, right click, and simulate the trade by the expiration, which is the last trading day on December 29, right? Click on that. Because you have the curve here, right? And select that today 21, that's correct, right? And then choose the underlying as Nike. So only look at the Nike stock. All right, so now you can zoom in to make the P&L curve larger. All right, so now you have similar chart as I showed you on the other platform. Current stock price is about 106, right? And the break-even point on the downside is also about 97, similar to Think or Swim. And then the max profit is also about $300. You see the max profit? That is at $300, right? Here it shows that you can collect 293, not 300. Again, different pricing models. They use different ways to refer before the market opens. Huh? Once the market opens, everyone has the same data, right? So right now, before the market opens, things can be slightly different, right? But roughly, it's about there, $300 max profit. The break-even point is also similar at 97. And see, you look at the pink curve here, the dotted pink curve. If it goes beyond the 111, which is a long call, the trade would still be profitable, though the profit would be less, right? So within the two short strike, this is a short put 100, and the long and the short call, which is 108. This is a max profit zone. This is a max profit zone. Yeah, so that is how you simulate the trade on IBKR. And you look at this, you say no risk on the upside, decent profit zone, and very low break-even point, which is margin for error is very wide, and max profit 300. Now, what you cannot see here is margin, the margin that they will block you, right? Let's see if we can see it here. If not, I need to go to the option chain to simulate it. Margin, let's see. If I go to margin sensitivity, this one will take time. Let's forget about it. All right, so for me to calculate the margin and see the return on investment on the trade, I just place the trade on the option chain, right? Then they tell me how much buying power or margin they will block me for the trade. All right, so let me go there and go to my dashboard when I have the option change here, right? Now, this is a 3-legged trade, 3 legs. So you need to turn on the strategy builder, turn it on. That's where you can execute a multi-legs order, right? So go to Nike first, Nike. Right, and then go to December 29, DTE, right? You can simulate the trade here as well. So go with the 25 delta. Where's 25 delta? Now you have 26 or 27 delta here, which is 100 strike price. Click bid to sell, right? Sell 1 contract here. Go up, 45 delta on the call. Where's the 45? Here you have 45, about 44.5, which is 45, okay? Click sell click bid to sell. That's the second leg. Sell 108 call option. This is a call option. And then third leg buy 111. Now you have 3 legs, right? 3 legs here, right? So here the broker tells me that they will block me about 129. The mid price right now is showing 310. but I think by the market opens, it will be around 300, right? Right, so 300, let's assume I get $300. Same with the other platform. What is the return on investment in the best case scenario? So $300 divided by 129. That is the margin that they will block me. So this one will give me 26% return on investment. And that is the reason why I prefer to do this trade on IBKR, because they block me less buying power. It blocks me less margin for the trade. Probably because I'm having a portfolio margin, right? For you to get a portfolio margin, I think that you need to maintain your account at the net liquid of more than $110,000. So this one is like $600,000. So clearly it meets the criteria. So that's why they gave me the portfolio margin. You need to apply for it though. But once you have the portfolio margin, they give you a better leverage. But again, trading option is all about the cash. They just give you a better margin, meaning in one trade, you don't need to tie up a lot of buying power or margin on it. This one, if you remember, in Thinkorswim, it blocks me about 1,600. This one blocks me less. So when I generate the same premium or profit potential on a lower capital, obviously it will boost the return on investment. Yes, you need to be smart on, how to optimize your capital. So that's one of the reasons why I maintain my accounts in different broker platforms. One is for better analytics purpose. One is for better capital management, and also paying me the better interest rate on my cash balance, right? So later on when the market opens, I will check the trade for profile, the risk profile on Thinkorswim, and probably on IBKR as well, but I will enter the trade here using IBKR platform. All right. Any questions before I move on to the second trade? Okay, so Yu Heng Chong, you say you got only 512 for the margin impact for the same trade. Why? I don't know why. If you have a half of the margin as I am having, good for you. Congratulations. Be happy. I would I don't know why, and I would not ask why when they block me less buying power. Now probably because you may have other positions, Nike on your portfolio, but if you do not have any other position, then it's good for you. It blocks less, right? Yeah, so Michael, I show you the capital for both platform, right? One is Thinkorswim is $1,600 for the trade. IBKR blocks me 1,100 plus. Tobias, you say it blocks you 2.3K with a regular margin account. Is that on IBKR? That's a little bit high to me, because if you have the Rect margin, I think they should give you a better margin than 2.3%, $2,300. That's a little bit too high for me. Andrew, you asked how to select a stock where trade lizard strategy would be suitable. Right now, I would be scanning the stock candidates or the trade candidates based on my manual bone eyes. Right? I don't have the scanner for it, so I just go through my watch list and I check one by one. I only have a list of fundamentally good stocks that are still undervalued. If you want to know who they are, then just go and sign up for Adam's courses, and he will teach you on how to value a company and then identify which one are still undervalued. If you don't want to do that work, then sign up for his UIP, Ultimate Investor Playbook, where he provide you with all the data, right? So then you know what stocks are still undervalued, right? In fact, I'm using a lot of his data here for my trades as well. Herman, you ask why need sell put this custom 108, 111. We need to sell put so that you can collect the premium. If you don't sell, you don't collect anything, right? So, but again, you need to learn all the basic stuff first. Now, the strategy that I'm using here is an advanced strategy, right? So I totally understand if you get lost right here, especially for those who know nothing about options. But no worry, when you come to the option program, we have all the videos that help you to get started from the get-go, from the beginning. We even have the Jumpstart workshop where it helps you to get started with the journey. So if you know nothing about the option, totally understand why you get confused and you ask some basic question, but but that's normal. Nothing wrong with you. Okay, just have a proper learning. We have all lessons for you, and that will be getting you into the level that I'm talking here, because I have to be transparent. The strategy that I'm talking here is advanced strategy. It's not for those who have knew nothing about the option. So you may be confused. That's fine. But again, the program we have will guide you through from the zero, the scratch until the advanced level. So it's no worry about that, right? So lots of people ask, why do I have less margin impact? I don't know. It could be your portfolio, the size of the account or something. But for me, I show you what it blocks me, right? Oh, okay. No confusion. I'm your student. Good. In this case, right? So good question from JK Gong here. Do I need to have money to buy 100 shares? Now, normally I would answer yes. But in this case, later on when I show you the exit point, there is a stop loss. When it hits a certain level, you stop out. And if you stop out, you won't get assigned any shares. So in reality, you don't need to buy shares. But if you really love Nike, for example, and you don't mind owning Nike shares, you do nothing, just let it go. Even if the share price drops, guess what? The worst case scenarios, you can buy Nike share at a discount. So let me show you the chart here again on the Nike P&L. Nike today, the share price is about 106, right? This is 106, the current stock price. And I show you the valuation, the 124. That is the fair value of the stock. At the current level, the stock price is undervalued. Worst case scenario, you will be assigned. You will be assigned at what strike price? While at the put strike, which is 100. Now, the best thing about this one is not the 100 is not your cost. You collect $3 upfront, no? And that is for you to keep. That's your money, regardless you get shares or not. So your cost of owning the share is only 97. 97. This is the one. This is a break-even point. So if you get assigned the shares in the worst case scenario, guess what? You can buy Nike shares at 97. 97 is a huge discount versus the current stock price. And current stock price is a huge discount versus the fair value of the stock, 124. See, in this strategy, you need to do it on fundamental legal stock that is still undervalued. Because if you really don't want to cut loss, and in the worst case scenario, you have to own shares. But the good news is you own share at a very steep discount versus the current stock price and versus the intrinsic value of the stock. So you don't need to have the cash to buy 100 shares unless you want to own 100 shares at the discount. Then keep the cash there. I have plenty of cash in my account to take on the shares of Lizard trades that if it it happened to be assigned to me. But normally I cut loss. I cut loss here, I cut loss there. I will talk about the exit point later on, right? But I will cut loss. Yeah. So I have a lot of cash. I show you on the other day. This is a different account that I have. On the other day, I show you another account. So this one, for example, I have like $1.8 million cash sitting there. So I can take up the shares, no problem. And by the way, this one paying me good interest rate. So month to date interest that I'm collecting from this account, $4,500, almost $4,500, right? And today is like 2/3 of the month. So I expect to collect something like $6,000 by the end of the month for one account. So 2 accounts, I got 10K easily from the interest alone. So that's why I love a high interest rate, actually. I don't want the Fed to drop interest rate. I want the Fed to keep raising rates. It's a different way of thinking about interest rate. People say, high interest rate. Yeah, that's a good way of leveraging high interest rate as well. It is even better for me. All right, so let's go back here. I think we're done for the first trade. And the market is about to open in 4 minutes. Right? Before I get into the second trade, maybe the next 4 minutes, I will answer a few more questions and let the market opens and then simulate the trade. I enter the trade and then I move on to the second trade. All right, hopefully that works for everyone. Get some coffee first. All right, let me answer a few more questions while I'm waiting for the market to open. How much is a beginner class? Well, in the offer that we're having for the black market events here, we have the offer for the level 1, which is a very steep discount. I remember, I don't know, 65, 75%. You can buy that one, but I tell you the best one is still the bundle between level 1 plus level 2 combined, and that will provide you the best offer. And Trade Lizard, this strategy will be part of the level 2, right? So it's best for you to sign up with the mastery package, both level 1 and level 2 combined, because you have a better value. Later on, I will flash the screen for you to see different offers, you know, the level 1 and 2, and then the one with my OTP service also. So just stay tuned until the end, right? But I can't understand it right. How can I check what now? How can I check the max profit or loss on this trade before I confirm the trade? The max profit is the credit, the $3 for the Nike that I'm talking about. That's the max profit. The max loss, imagine the max loss. You get assigned the shares at $100 minus 3. So your cost of owning the shares is 97. 100 share costs you $9,700. And that is your max loss. Why? In what scenario? Well, in the scenario when Nike share, for some reason, drops to 0 and never recover. If it drops to 0 and stays there until the expiration, that's your max loss. No downside protection there in this kind of trade. That's why you need to do it on fundamentally good stock. Don't do it on lousy stock, which can go bankrupt. It can go bust. This one needs to be done on solid stock. But that's a hypothetical loss only, because there's no way Nike share will drop to 0 in the next 36 days and stays there and never recover, right? Unless the whole thing, I mean, the whole world turns upside down, like World War III, the nuclear war, things like that. And who cares money in that situation, right? In the course, so Chun Beng Jiao, you asked in the course, will be taught in IBKR or Think or Swim? So now more people moving into IBKR. So we keep adding videos on IBKR, right? So you will see a lot more videos on IBKR. So we use both IBKR and Think or Swim. The question from Lee Chi Hui say, the exit action, is that mentally or is that automatically? We don't set a stop loss automatically, because the reason is because the option liquidity is not so great. Even if you execute a trade in the most liquid options stock like Apple, Meta, Amazon, Google, the pricing of the option could be very wonky at times. And if the wonkiness trigger the stop loss prematurely, you can get stopped out unfairly. Don't do that. Don't set an automatic stop out, because it could be triggered by the wonkiness of option pricing. We do it manually. We monitor the trade, and if it hits stop loss, obviously from the chart, exit, right? Normally, the way I do is on the day when the stock price drops below the stop loss, I give it a little bit the benefit of the down. I don't take action on that day. I wait for the price to close on the day, and I take action on the following day. If the price doesn't recover, I take action on the following day. Yeah, so that's normally you don't have to wait. Like for people who are in Singapore, you don't have to stay for the whole night to watch your trade. You just leave it there. The day after you check, okay, this one hit stop loss, right? Tonight, if it doesn't recover, I will pull the plug. That's normally I do. Yeah, so hey, yes, no, this is from the team. Yeah, okay, good question from Dylan Ong. Is there any IV impact on this strategy? Can you simulate on IB? Yes, IV impact also have a good impact on the trades. Ideally, because it's a selling and you collecting premium, right? The best scenario would be you enter the trade when IV is high, right? And then when IV drops, it will bring more benefit to the trade. Yes, and you can see the IV impact on both Thinkorswim and in IBKR as well. So in Thinkorswim here, if you open the set prices, you can see here the Vega, which is the impact of the implied volatility. So if implied volatility drops, it will benefit the trade. If it goes up, it will negatively impact the trade. So you see here, if the implied volatility goes up by 1, it will hurt the trade by $9. Yeah. If implied volatility drops by 1%, this one will bring $9 to the trade. Similarly on IBKR, you could also see the same thing. It is here in Vega, right? So if the price implied volatility drops, it will bring $12 to the trade because you are a seller. So drops mean it will add $12 to the trade. If it goes up, it will hurt the trade by $12. So you see between IBKR and Thinkorswim, it has a slight different numbers here. One is like 9, the other is 12 because they use different pricing model, but it's close enough. All right. Now the market has opened, and let's watch the market a little bit before we take the trade. Yesterday, the market was up very strongly, and then today looks like people taking some profit before Thanksgiving holidays, and that's normal. That's normal. To me, it's still early in the day. These early losses here could be temporarily, right? It could reverse anytime later today. Let's look at other markets. Interest rate continue to go lower. The 10-year yield now dropping again. It's good news. Nasdaq is dropping more than S&P 500. Dow Jones dropping a little bit, not much. It's okay. VIX going up a little bit. Oil dropping 70 cents per barrel. Natural gas up slightly. Gold is up big today. Gold is up big. I don't know what news. Is there any geopolitical news that's going on that gold jump up like this? Normally it's driven a lot by either US dollar weakening or some geopolitical outburst somewhere. Yeah. Euro strengthening, Aussie dollar. So it could be because the US dollar is weakening. Because Euro is also strengthening. Aussie dollar is also strengthening. So obviously, US dollar is now weakening, and that could be the reason why gold is going higher. Interest rate, again, going down, but the bond price also going down a little bit. Yeah, this one 20 years is in 10 years straight. Yeah. But, yeah, I don't know. Normally, this should go invert correlation. So Microsoft is down today. Yesterday, it's up big, $7.5 because the news of the CEO trying to get all the talents from the OpenAI, and there was like a competition between different big companies who want to grab all the talents to bring into their companies to build the AI capabilities. So it's very interesting to see it. Meta is dropping, Google steadily at slightly up, Amazon's going down, Tesla up, Nvidia will have earnings today, right? After an hour, after the close today. So it will be interesting to see how the price will move after the earnings, because right now at 503, I think it's at the on-time high, right? Today earnings will be make or break. If the earnings really blow out earning, then you will see the new on-time high again for Nvidia. If it's not so fantastic, then chances are there will be sales on news. It's interesting to watch that one. All right, so yeah, so those are the key ones that I'm watching. I still have a lot below here, but the most important one, I have it on the top here, right? So overall, I would say slightly kind of negative, but the sentiment is still very strong because I see some recovery already. Earlier it dropping, now it's kind of steady, going a little bit better. And I would say between now and Thanksgiving, the market will be behaving like this, going sideways or slightly on the bullish side. Market stays overbought though. How do I know the market is overbought? I use a stochastic indicator to gauge whether the market is overbought or oversold. I like this one, stochastic food here. That's indicator. And it shows that it's overbought, right? Over 80, that's we overbought. And it's now sloping down. That means it's reversing from overbought. I think, I mean, as the market now hitting the resistance level here, right? The resistance level here, there could be some pullback from here after a very strong run up. And but that I would expect that will be a shallow pullback, and then the stock market will head higher towards the year. That's how I think, right? So right now, dropping 12 points, not a big deal. And let's go back and resimulate the trades, the Nike trade. All right. Now, normally I don't trade still within 30 minutes window here, but today I don't have much time, so I need to do it before I need to sign off for something else. I'll show you some activities going on in the family side here. All right, so let's look at the Nike trade here, the one I have it. All right, so now the market tells me that I could not get $3. The mark price is only 2.5. So it could means, I think then that means Nike price is going higher, I think. Let's check it out. Yeah, indeed, it's going higher. But it could be also because the pricing is still wonky. I mentioned to you that the first 30 minutes, the price has not been stabilized and it could be wonky at times. So I would wait a little bit to see if I can get a better premium. Now it's improving to 2.6. And if not, then I will need to resimulate this one. Why don't we do this? While we're waiting for the market to stabilize, let us take 3 minutes break, just for me to have some water and then a bio break. Okay, 3 minutes, everyone. I see you back in 3 minutes time. All right. All right. Welcome back, everyone. I hope you can hear me. Can you give me a signal? You can hear me well. Yeah. Thank you, Tammy. I saw the question from Ken Tring here. Do you normally set the short put in the money or out of the money? Of course, out of the money. Of course, out of the money. So Nike, I'm planning to sell the short put at 100 strike price. Current stock price is 106. The short put is not 108. Where do you get the 108 from? I'm not selling 108. 108 is a short call, right? The trade here you see here, the 108 is a short call. There's a call, not the put, right? The short put is 100. It's out of the money, right? Maybe your confusion there. Now, right now, the stock price, I think the stock price is going higher a little bit. That's why I could collect less premium, not exactly $3 or 3 plus, but at 2.8, slightly less, right? So I have to check whether I'm okay with this trade or not. I can also show you the same trade on IBKR to see what is the pricing right now. It's 2.8, right? 2.81. If I go to IBKR here, see the P&L will change. It's not like negative anymore. So this trade, I'm still having it here. If I click into the price, it shows me that it's between 2.8 and 2.81, similar to Thinkorswim, right? So you see, when the market opens, the market price would be the same between IBKR and Thinkorswim. But before your market opens, you simulate the trade. Both platforms use different option pricing models. So there could be some slight differences, right, between the two. But the market price, the one you can collect or the one you need to pay to enter, should be the same between the two platforms. But a little bit wonky here. It's now showing like 2.6 something, now 2.74. So obviously, it's still within the 30 minutes. That's why the price is wonky. Don't go for like 2.5 like this, because that will be too low. You see, 2.5, the loss zone could be quite a significant number here. And then if the price goes up so much, you could be losing some small money. Yeah, but I don't like that. At least I need to get at least 2.85 or 2.9, but the best would be 3 or more, right? Otherwise, I need to update the trade. Now it's 2.82. It's okay. So I think because the price had changed, so maybe I need to re-simulate the trade, right? Now it's showing 2.95. That's what I'm talking about. The price has not been stabilized, so it could still be very wonky. Yeah, so it's now flat. Earlier it was down. It was up. Now Nike price is going down. So still up, but up less than before. So I could continue to stick with this trade, but I keep $3 as an entry price. And if the supply drops a little bit from here, it could be filled, right? So now, as I told you, I will enter the trade using my IBKR account, because that's where I earn interest on my premium. So I go back to I keep the same trade. I keep the same trade for in IBKR here. What is the normal trade size or the position size for my account? For IBKR, for Trade Lizard trades, I would target around $1,000 max profit per trade. $1,000 per trade. That's me. If you're happy with 300, that's fine to you. But I would target about 900, 1,000 kind of thing. That's my normal comfortable level of trade. So then I would need to go to 3 contracts. But you don't have to. You can pay per trade. You can go with different position size. For me, I want to enter with 3 contracts, right? Which is about $900 for the premium. And that would be my max profit. So about that, 900 to 1,000 is a max profit. That's my level. But remember, I don't wait until the end of the day of the expiration to get 1,000 or 900. I will exit early. So I get half of that. So I get like $500 profit, and then I close the trade early. Yeah, that's normally how I do. So in this case, 3 contracts here, I will negotiate the price. The bid price is 9.3. It's hard to get free, but I just leave $3 there for now, right? And then later on, I can revisit and change the price. If the credit is too low, I need to re-simulate the trade. Right now, I negotiate. I want to keep it at $3. And for 3 contracts, the broker will block me about 3,300, right? So about 1,001 for 1 contract. So 3 contract will be 3,003, right? So then I submit the order, and it tells me that it blocked me 3,345 to enter, but to maintain my trade, they will hold about $3,000 for my 3 contracts trade here. All right, I'm happy with that. I override and transmit. Yeah. So now the order is now on the queue here. $3, 3 contract, and 0 has been filled. So I'm just waiting there. And unless, I mean, if Nike price drops from here, I would have a good chance to get it filled. Now it's dropping a little bit. So if it drops more from here, I think I could get $3 later on. So I'm not in a hurry here. It's still early in the day. Leave it there. And price is still a little bit jittery, wonkiness, right? Then it could have a good chance to get filled later on. All right. So that's the first one. Let's move on to the second trade. Dollar General, right? This one I talked on the other day. I borrowed the idea from Adam. He did on the valuation. So let me show you Dollar General chart, DG. So Dollar General chart today is flat. Yesterday I think it was up by $1. And intrinsic value is about 134. The stock price seems to have bottomed now, and then now have found a footing and recovering. Over the past month or so, it had been like going sideways, which is the perfect setup for a trade lizard. Because trade lizard, you do not need the price to go up. If you don't want the price to drop significantly either. As long as it continues to go sideways or slightly up, that would be the best. Now, could be because the 50 moving average, it has been serving as a resistance level. So it's kind of hitting the 50 moving average, and it could not break above that, which is fine. You don't need the price to break out to make money in trade lizard. As long as it doesn't collapse, it's okay. Of course, there's earnings coming up. And if I choose the same DTE for the trade, that would cross the earning. I need to feel comfortable with the downside. I mean, the break even on the downside, because this one will cross the earning. If I am okay with the risk, I will take the trade. All right. Nike doesn't have the earnings in the DTE that I chose, but this one has a earning in between. Now, the good thing about the earning is because of the earnings, IV, the implied volatility goes up, and I could get a better premium for a trade. And because of that, I can afford to sell the put at a lower delta, not even 25. It could be like 20 or even lower. Then that trade will be safer. All right. So let's simulate the trade together on Thinkorswim first. So let me go to the Thinkorswim here. The market still fluctuate at that level. So I open the same DT 29 of December here. Let me simulate the standard trade lizard trade first at 25 delta and 45 delta kind of thing. And I will adjust the trade because this one has earnings. So I need to adjust a little bit to make it safer. So as usual, I will go to 4 to 6 week DTE, go to the put delta column, where's the 25 delta. So there's no 25 delta, 26, that is close enough. I would choose this one. Where's the 45 delta on the call? Well, 45 is here. So then I will sell 126. This one I will sell as well. So I will sell here. I will sell here. Where's the call that I need to buy? Well, anywhere between 129 to 130 to 131. So I need to see which one give me the best optimal one. All right, but you get an idea of how to construct a trade by now. Right, execute a trade, click sell. Right, click bid to sell for 112. Right, and then hold the control key here, click bid to sell 126, which is 45 delta call. And then let's see if I can sell at 130. I buy 130. Now, if I do this one, what is a credit I could get from the trade? Well, I got about $5 or 4.85. And the spread here between the long call and the short call is $4. So obviously $4.75 is greater than $4 here, which is good. That means I have no risk on the upside. You know, I can simulate the trade and you will see it. Simulate the trade here, and you will see here the trade has no upside risks, right? So if the supply goes much higher, this is a zero line, the trade would make some profit. Yeah, the trade will make profit. So it's good. No risk on the upside here. And the downside, there's a downside, set slices at break even at the expiration. Oh, change this one to break even to the day after the expiration, which is December 30th, right? So this trade would have 85% chance of winning, 85%, very good probability of winning. And the break-even point is 107, well below the current stock price, which is about 122 or something. The stock price needs to drop like $15 to hit my break-even point. Huge probability of winning. That's why I like about this trade, right? You have a big margin for error here in case the earning drops, right? I mean, the price drops after the earning. Now, let me optimize the trade further. So this one is a good trade, but it's not the best. Why? I want to collect as much credit as possible, as long as it's greater than this spread between the two call strikes here, right? But because this is going through the earnings, my priorities would be to have a safer on the downside in case the supply drops a lot after the earnings, right? So instead of going to 131, which I could do, I could go 131, where I get like $5 spread, and $5 spread is still greater than $5 spread here, or $5 credit is still better than $5 spread here. I don't do that. I would go back still at $4 spread, but I will push the put strike lower to create more margin for errors. Yeah. So then I would sell, instead of 112, I will sell 111. Still, I got more than $4, which is still good, right? This $4 spread here. I could sell even a lower put, which this one, 110. So if I sell 110 instead of 112, it's a bit wonky though. Let's see how the price stabilizes. This one is relatively low liquidity stock. Okay. But let's say I got $4. I got $4 here, and it's still equal or greater than the $4 spread on the call. At the same time, I can sell a lower put, which is safer. So imagine if I go back to the option chain and check out the delta of the 110. The 110 put option, the 110 here has 22 delta. That means there's only 22% chance that the supply drops below 110. That means I have almost 80% chance the supply is not dropping below that, right? So because of that, my profit zone would be even wider. So I go back to the analyze trade here. If I choose 110 here, you see the break-even point is now here, not here anymore. So my break-even point is now pushed down further. That means I have a better chance of winning. So I need to move this vertical line to the new break-even point. And here you go. Not only having 80 something, now I have 87% chance of winning. So for earning play, I would prioritize protecting the downside risk, right? So in this case, I push the put option down further to create a huge profit zone, very wide profit zone, and high probability of winning. So in case the subprice drops, the trade would not be hurt that much, or it's still making money, right? So that is my priority. When I play earning, I prioritize protecting the downside risk and maintaining zero risk on the upside. And let's check out the profitability of the trade. So in this trade, let's say the price is a little bit wonky. Let's say I could collect $400 for the max profit. How much the broker will block me in terms of buying power? Confirm and send. This one will block me 1,529. So this 400 divided by 1,529 buying power or capital. So what do I have? 400 divided by 1,529. 26%. Very good. Greater than 10% for sure. 26%. This is the beauty of using this strategy to play earning, because that normally happens when you use this one for earning play, because the option premium is getting elevated. You could have a very good return on investment potentially, and the profit zone is still very wide, in fact wider than usual. So don't afraid to use this on earnings. However, don't use this for earnings for speculative stocks, lousy stocks. Don't do that. Only do it for fundamentally good stocks that are still undervalued. Then you have a huge margin for error. Worst case scenario, you own the shares at a steep discount. So I tell you, this is a worst case scenario. The stock price collapses and you have to own the shares at about 106. Well, 106 compared to 122 today is huge discount. And compared to the stock valuation at 134, it's still way undervalued, right? That's the best thing about this strategy. But again, I don't hold shares. So when it hits the stop loss, I will exit. And I show you how to exit, what exit point later. Right? Now, let me simulate this trade on IBKR, and you will see that this this return on investment could be even better. I think IBKR will block me less than $1,500. Let's check it out. Yeah, let me do it on IBKR and see how much it will block me. Okay, so go back to the what if here. Let me untick on this trade and hide the Nike trade. Now I enter with DG. Dollar General, same DTE, which is December 29. I would sell 20 delta. Remember, I sell a lower delta put option, which is 22. I sell 110. And I sell 45 delta, which is about 126. And I buy 130 to protect the upside risk. So that's the 3 legs. And then I put here -1, which is one sell 1 option, -1 sell 1 call option, and +1 buying 1 call option. Choose underlying as DG, right click, untick on the previous close. I don't want to get a previous close. Custom dates, last day to the expiration, which is on December 29, which is here. And I think that's good. And now zoom it in. Yeah. So you have a similar chart as you seen it in the Thinkorswim. Right now, the stock price is at about 122. Right, see at 122.12 here. That's the stock price. If I enter this one, I would collect 414, which is a little bit more than 400. But I think it could be just 400 because of the wonkiness of the pricing. Let's see. And therefore, there's no risk on the upside here. You could make some small profit if the supply goes up a lot. Break-even points is about 106, similar to Thinkorswim, wide profit zone, right? And the trade has a positive theta, so every day it brings me $8 a day, right? Vega negative means if the implied volatility drops, it will bring benefit to the trade. And rightly so, after the earnings, the implied volatility should drop and it will bring extra benefit to the trade. So this is another good point of using this strategy for earning play, because you will have the Vega working in your favor. After the earnings, IV will drop, and then that will bring extra benefit to the trade. The trade has a small theta, a small delta. That means if the supply goes up, it will make some money. If it drop a little bit, it will be losing some money. But the theta is always positive. That means time decay would offset some of the losses if it goes down, right? Right now, implied volatility is high, 50%, right? So then check this one on the implied volatility on the IBKR here. On Thinkorswim here, you want to see that also 53%. Now, the implied volatility percentile is 95, huge, very high ranking, right? It's good because earnings coming and the market expect the supplies to move a lot. That's why IV is high. So looks like if I enter the trade on IBKR here, I will collect about $4.1. And here I can collect it's wonky. I don't think I can collect 4.65. But when I negotiate, I will always start at the high numbers, and then I go down from there, right? But very wonky for this stop. I see I will be getting something like 4 or 4.1, right? Similar to IBKR. So I will simulate the trade here, and I enter it in the IBKR, right? Before I do that, any watch out, any questions you're having? Okay, so Visa, you say you got 77% probability, not 87%. What platform are you using? If you use Thinkorswim, I think you should have more than that. You make sure you select the right expiration date in here. Expiration date. It needs to be the expiration. If you choose something like the week before that, yes, of course, no, it could be, or you choose something like later, then the percentage will be different. You need to choose right after the expiration date. I have 87%. I don't know why you have different number. Yeah. All right. Right now it's about 4.2. Let's see how much I get when I fill the trade. You sell put at 112. That's why you have a lower probability of winning. I sell 110 here. Yeah, if you sell 112, you get a better premium. But of course, the probability of winning will be lower. Yeah, but I'm talking about 110 here because I am prioritizing protecting my downside risk, right? So I sell a lower put. I have a higher probability of winning. I collect a little less premium. That is the price I need to pay for having extra protection there. It's up to you. If you are a little bit more greedy, going for more premium, go for a higher delta put option. But I protect my downside risk here with the earnings coming. So I push the delta lower for the put option. Hence, I have a high probability of winning. All right. So I will enter this trade now on IBKR here. And remember on Thinkorswim, it blocks me about 1,005. Let's see this one, how much they will block me on IBKR. Right? So I go to the dashboard and so the Nike is still queuing there. And Nike is going down slightly. So later on, I could go down on the price a little bit. I think it would be filled. But for now, I just leave it there. DG. All right, so now DG, if I go to December 29, remember I sell a low delta, 22 delta instead of 25 because I want to play safe in this case with the earnings coming. So I will sell 22 delta here. I sell 22 delta, which is 110. That's the first. Remember to turn on the strategy builder. click on the first one. Now, the good thing about IBKR is I don't need to hold control key. I just get my hand free here. Click on the 110 to sell. That's the first leg. Second leg, I will go to 126, which is 45 delta. See, 145, the 45 delta here, sell. And go 4 points higher at 130 and buy to protect. That is a three-legged trade. Sell 110 put, sell 126 put, buy 130 put, sell 126 call and buy 130 call to protect the upside risk. Now, click in here, you will see the mid price. Click in here. The mid price is $3.99. Okay, let's call it $4. Yeah, $4. That's likely I will get that price. But again, this one is rather low liquidity stock here, so it could be very wonky. Now, as I said, IBKR blocks me less buying power for this one. So the margin is only 1,002, not 1,005 plus in Thinkorswim. That's another good point about IBKR, especially if you have portfolio margin, right? Now, as usual, I want to target at least about 1,000 or 900, 800 is fine. So if I can collect $4 for one contract or $400 for one contract, I probably go with 2 contracts, $800. That's fine, right? So after the earnings, if profit is hitting half of my max profit, I will exit the trade. All right, so 2 contracts, the broker will block me about $2,500. Yeah, $2,500. So I note it down here. Later on, when I put in the tracker, I will know which one blocked me how much. So I will take a photo of this margin. Now, if I forget, I just re-simulate the trade and I will know how much it blocked me. But I just keep track with the number here. And remember the Nike, it blocks me 3330 or something, right? Remember that number for 3 contracts. So this one, let me start with a high number. I want to collect more premium, right? So let me start with 410 is a big price and set. Yeah, so 2 contract, they block me 2005 to enter, but they will keep 2003 to maintain the trade. So in reality, it blocked me only 2,264 for maintaining my trade ongoing. So I will take this one. Yeah. Override and transmit here. It's filled. Wow, I could have got a better price. Okay, anyway, done. So water under bridge, it's already gone. So I could have bargained with the higher price than this. Okay, got. Okay, maybe I left some money on the table here. Maybe I should have started with 4.2 or 4.3, but it's okay. I'm happy with 4.1, at least more than 4, right? So now I'm in the trade. I'm in the trade, right? So this is good. Nike is still queuing, so I don't know. See, when you trade this one on the kind of low liquidity stock, the price may be very wonky. So in that scenario, to avoid getting the order so easily filled, you just start with a very high number and gradually reduce the price until it's filled. Now, I started with a higher number, but that's not high enough. I could have started at 4.3 or 4.2. But anyway, I got 4.1. I'm happy with that, right? Now, somebody asked me, what is the exit point? Now, I'm in the trade. What is the exit point, right? So now I'm in the trade. So how do I monitor this trade on IBKR? So then I can go to the portfolio risk management here. So this is the one that I open a new window and then go to the portfolio tools, and then you enter and then you pull up the risk navigator, and then you choose open my portfolio. So that's where you have portfolio. Now you have all the position in the portfolio, but you don't care other position. You only look at underlying of DG. Now DG in my portfolio right now. So I click on it. So it only pull up the DG here, the second one, not the first one. The first one has nothing, so unhide this one. So this is the 2 contracts that I'm now in the trade. I'm in the trade, right? So right now, my trade is losing $14, but perhaps because I left some money on the table, that's fine. So if you enter the trade right now, you could get a better price than mine. So you could get like $4.17 credit instead of 4.1. So that's why I think I have left some money on the table, but that's okay. Yeah, sometimes greedy is good. This time I was not greedy enough. So right click on the chart, untick on the previous close, and right click again, choose the last trading day, which is on December 29. That will pull up the P&L chart here, and then select the day today, which is 21. So you have the two P&L curve. The dotted one is the one at expiration. The solid one will be the expiration of today. Zoom it. Let me make it one larger. So now I'm in a trade. So I'm not simulating it anymore. Now I'm looking at the trade that I'm already in. I forgot one thing. Once you review the trade that is in your portfolio, you need to change this one to equity unrealized P&L. Need to choose this one, equity unrealized P&L. Otherwise, it will simulate the new trade for you. So you need to review the existing trade. You need to change this one to equity unrealized P&L. Right? So zoom it again. So now I'm reviewing my portfolio, my trade in my portfolio. So I'm in the trade right now. The stop price is still around 122, which is a break even, or losing some small loss here, $4. And then if the stop price stays within this profit zone by expiration, right, I would make a lot of profit. In this case, $800 for 2 contracts, right? So that's my max profit. Forget to calculate the P&L, the risk, the ROI. So I got, actually I got better than 800, right? Because I got 4.1 for the trade. So 4.1 for 2 contracts, that 820. 820, that is my max profit. And then the broker blocked me. Remember, I still have the picture here. To maintain the trade, the broker blocked me 2264. 2264. So this is the margin that they blocked my account to maintain these 2 contracts, right? So I do the math here on return on investment. If I get the max profit, that will be 820 divided by 2264. That is 36%. 36%, very good. Well above the 10% criteria that I set as a rule, right? This is 36%. Normally, when you play earnings with Trade Lizard, you could get this kinds of return on investment. Yeah. Now, obviously, the best scenario would be after the earnings, the stock price doesn't move much up or down, then you could quickly get half of the profit and exit. That would be 18%. And in that scenario, you don't need to stay in the trade for 36 days. Perhaps you'll be in the trade for 2 weeks and you get 18% in 2 weeks. That's pretty good, right? So don't afraid to use this on earnings, as long as you do it on good stocks that are undervalued. The only thing where you need to be concerned is when you do it on lousy stock and the earnings coming. That's where you need to avoid, right? So in this trade, I'm in the trade now. It's okay. Now, question people asked me earlier, how do I exit the trade? Depends on different price movement scenario. As I said, the best scenario would be the time is running out and the lower curve here will rise. After the earning, it will rise like this, right? Or it will be steepened down from here. And if the price doesn't move much within this range, for example, that is the best scenario. Then in that scenario, exit at 50% of the max profit. So the max profit for me in this trade is 820. So if I can exit at 410 profit, I just close the trade, release the margin for the new trade. No point to stay on the trade to harvest the smaller part of the profit and wait for a longer time to get it, right? So if you can get half of the profit in less than half of the time, close the trade, move on. Because from the annualized return on investment, that would be a better one because you can recycle your capital very fast. That's why in the webinar 2 days ago, I show you I did 258 trades. I mean, cumulative capital is $1.4 million. But in fact, I use only $100,000 or less than $100,000 for that entire 258 trades. Yes, because this one you need to recycle the capital very fast so that it can maximize your return on an annualized basis. Yeah, so that's the best scenario when the price doesn't move much after the earnings. Now, what if the price moves a lot on the upside? Well, you make less profit, but it's still a profit, right? So in that scenario, just take a small profit and close the trade. Yeah. Often when the stock price goes up a lot after the earnings, it won't suddenly drop down, right, in the next few days. And normally it's not the case. Based on my observation, if the momentum of the stock is strong, the earning is good, it will continue to go higher. As the case of Nike, I show you, right? It dropped, earning is good, it pop up and it continues to go higher. So in that scenario, if it continues to go higher, that means you make less profit. So if the stock price moves a lot after the earnings and goes out of the profit zone here, or the best profit zone here, then just close the trade and take small profit. Don't wait, because if you wait, the profit will drop and get back to the near break even here. Yeah, or small profit here. The longer you stay, the smaller profit you get, unless the price suddenly drops back down here, which is unlikely. Yeah, so that's the two good scenarios. Best is it stays within here and you make a lot of money. Good scenario, not the best, but good scenario is it goes up and you make smaller profit. Now, the bad or the not so good scenario when it drops, right? And that really depends on how long you've been in the trade. Remember, this lower curve will rise over time, and it drops moderately, it's still okay. You will still make some money. You'll still make some money. Only when it drops a lot and going outside the break-even point here, that's where you make losses, right? Now, my rule is here. You look at the short put here, 109 or 110. That's the short put, right? Normally, I cut loss when the supply drops below the short put. After the earnings, this curve will rise. So you will not lose this much money, like $600 or $700. I think by the time this one approach the earning and the time is running out, this curve will rise. This curve will rise. So instead of this curve, it will rise like this. And in that case, if the stock price drops to that point, you would lose something like $100 or $200. And after the earnings, implied volatility drops. That brings extra benefit to the trade. And I guess even if it drops to this level, you would be near break-even point. Only when in a disaster scenario, when it drops so much outside here, guess what? You will be losing more. So my cut loss will be if it drops below 110, but not later than 106, which is a break-even point here. Between these two, you need to cut loss. You need to cut loss. Because if you don't, the further the stock price falls, the more loss it will snowball. It will increase. Yeah. So cut loss when it drops between the short put and the break-even point. The earlier would be smaller loss. Yeah. This one, if you keep it until it drops further, you will be losing more. But you have the benefit of that because sometimes there's overreaction after the earnings, and stock price could recover a little bit, and the loss will be improved, right? So there's a benefit of holding the trade beyond the stop loss also. That is when the stock price recovers after a big reaction. I remember that it happened to Fortinet, right? Fortinet dropped a lot when they sent out the warning. It drops but it's overreacted. The supply dropped a lot, but then it started to rebound. So that's the one. Give them a benefit of the doubt, especially on good stocks. Yeah, so it's a little bit odd on the art side, not the science, that what point you want to cut loss, right? If you want to avoid the small or the bigger loss, then cut loss when it dropped below 110. If you want to give it a benefit of the down, maybe you wait until 106. All right, so we done the second trade here. Let's look at the trade, the first trade again on Nike. Market is dropping a little bit more. Nike now the price is 2.8. It's not even 3. So I just leave it there. Nike, I think the price is dropping a little bit, right? Nike. Yeah, 11 cents. If it drops more, I could have a good chance to get it filled. But not, then I need to go back and revisit the trade. Now let's go to the third trade. And then we get back to the Nike. Right. So the third trade for me is Google. Google or Amazon, one of the two that I'm thinking. Google is that up today? I think it's up today. Yeah, up 44 cents, up 40 cents. It could be Google or it could be Amazon. I was thinking one of the two. Now, Google's the short-term trend is very clear on the uptrend here. It has recovered since the earnings and it's still way undervalued, right? My conservative intrinsic value is 153. Right now, the stock price is 136, so undervalued. So let's see if I can get a good trade on Google. That's one. Or I can also look at Amazon later, especially today Amazon is dropping $4. I don't know what's the news today. Amazon dropping $4. All right. So it could be, if it drops a little bit more, it could be a good candidate for trade desert as well. Because it looks like it is making some, heading a little bit lower from here, right? So you can wait for a few more days to get a better entry price. So right now, stick with the Google. G-O-G-O-G-L, right? Right, just follow my rule again. Go to make it simple, I use the same DT. I can choose 31 days also, but let's say I use the same DT. 38 days, and I follow my rule with the put size. The put size here. If I sell 25 delta, there's no 25, there's 24, which is also because it's safer. So I can get this 131. I sell 131 put. On the call side, there's no 45 delta, there's only 44, which is fine. It is safer also. Then I will sell this one contract here. The higher one, I need to check which one, 141 or 142, right? So execute this one, sell the put here at 24 delta, and sell the 44 delta call, and then buy 2 points above to protect. Here I got 2.2, which is good because the spread is $2. And I got like $2.2. So it's no risk on the upside. So now, normally I want to get it close to the spread as much as possible to optimize the trade. So there are two ways for me to do it. One, I can sell a lower put, which is safer. So instead of 131, I will sell 130. Then I got $2. Right? $2 is still equal to the spread here of the call, which is good. But the trade will be safer. So the put at 130, that will be even lower delta, it's 21 delta. So I like this one because it's safer. Well, the credit is still decent, right? One way for me to do the trade. Or I can keep the own 131, but then I will see if I can buy a higher call, which is cheaper, so that I can collect more premium. So in this case, I will sell 142 instead of 141. So this new trade, I will collect 2.56. But this one is less than the spread, which is $3. So this one, I won't do it because it's less than the spread. Or I can sell a lower or higher call so that I have a bigger profit zone on the upside, and I keep $2 spread. So in this case, I collect $2 plus, and the spread is $2. So the premium is still good. Yeah. So there are different ways for you to construct the trade here. Depends on your thesis. You can prefer to do one trade or the other. For me, you ask me, right? The market has run up a lot over the past few weeks. I mean, people feel exuberant. I mean, very excited about the interest rate start going down, and no more recession in the horizon. And then with the year-ends coming, so there seems to be some early rally, right? A Santa Claus rally. So I prefer to protect the downside in this case because the market is overbought. I showed you the chart of SPX earlier, right? It's overbought. Most of the stocks has run up a lot and they are overbought. Even on Google here, it's slightly overbought as well. See, stochastic is overbought. So my prioritize at this stage is to protect the downside risk, similar to what I did with the Dollar General when we play earning. This one doesn't have earnings in the near horizon, but because it's overbought. So I prefer to sell a lower put than to sell a higher call. Yeah, because I am cautiously bullish on the trade here. I want to protect a little bit better on the downside. So because of that, I prefer the trade with the lower put and keep the own one on the call. So this one. So I prefer this one. I will sell 130 put, which is 22 delta, safer, right? And I will sell a bull call here, a bear call here, and I collect $2 plus, which is more than the spread here. Yeah, so trade is good. Analyze it. On Thinkorswim first. Right click. Analyze the trade. Here you go. Set slices at break-even point on the day after the expiration. You see, because I push the put strike further down, this trade would have very high probability of winning. 90% chance of winning. There's only 10% chance of losing money in this trade. And the break-even point is very well below the current stock price. So the break-even point is near 128, which is about $8 lower than the current stock price. That means the stock price needs to drop about $8 to hit my break-even point at the expiration. Right? So I have quite a significant downside protection there. At the current price, Google is below intrinsic value. Yeah, I showed you that earlier. Intrinsic value is about 153. This is conservative one. And right now it's undervalued. And worst case scenario, if I need to buy the stock at 128, it's even more undervalued. And I love Google. I love Google a lot. I watch YouTube almost every day. And I'm a big fan of Google. In fact, Google, I have the biggest position on Google in my portfolio, right? And so far, the crouching bull on Google is my biggest winner for the year. I think it makes $65,000 something for one single trade, right? So I like this one. I want to be protected a little bit on the downside. Let's check out the profitability, right? So in the best case scenario, when you got the max profit here, that is let's check the price right now. 202, right? Let's call it 202. That's the max profit for one contract. And how much the broker will block me if I use Thinkorswim. Right click, send it out. It will block me about $2,000. So it will block me about $2,000. So which means I will get about 10% return on investment on the max profit, which is meeting my criteria for the entry. Just barely meet that one. Not the best, but it's okay because I like this stock. But if I do this trade on IBKR, I think they will block me less than $2,000, right? Again, probably I would do 5 contracts here because I want to collect like about $1,000 something for this trade. We trade these out, but you don't need to. You just need to, maybe you just want to enter one contract if you want, or paper trade, right? Right. So now let me simulate this trade on IBKR. Right. So now let's go to what if, and let me unhide this one, and let me simulate the new trade and call Google. Yeah. Option, go to December 29. Yeah. And then I would sell 22 delta, right? Safer, right? This one, 21, that's 130. And I would sell 45 delta, which is 44 here. And I buy 2 points above that. So 3 legs there. All right. So I have other positions here. So I need to, how do I, only on the legs that I want to enter. So now -1 here, -1 here, and +1 here. So that is a trade. -1, -1. Oh, this one minus. All right. So this is a trade. Just ignore other legs because I have other legs also, but only the one I have the tick here, that 3 legs, those 3 legs there. Right click, analyze the trade, and then select the last trading day, which is this one, and select today and underline, just choose Google and select today, which is 21. It's okay. Zoom it. So I have the similar P&L chart in IBKR here, right? Same DT, same break even, 129 or 128, sorry. 128 is the break even. And same one contract, I got about $2 or $200 here. Yeah, about the same, $200. Similar trade, right? So now I go and place the trade on my IBKR platform using my dashboard. The market's going down quite significantly. My account doing fine. So let's do it on Google. #29 of December, right? Sell 130, which is 22 delta, 1 leg. Second leg, I would sell 139 call, which is 44 delta, and then I buy 141 call. Yeah, which is 2 points above. So then if I click into the price here, the mid price is about $2 or 201, right? I can start with a higher number and then negotiate down from there. Now, as I said, IBK blocks me less buying power. It only $1,400 per contract. Thinkorswim blocked me $2,000. Remember that one? So this one, I would have a better return on investment. So if I collect $200 and divided by 1,004, that will be about 14%. It's not even 10%. The other one, 10%. Now, as usual, I enter with about net credit I want to collect is about $1,000. So I need to go for 5 contracts, right? And they will block me about $7,000 for the trade. I can negotiate with higher credit. Don't leave the money on the table again. This one is a high liquidity stop, so normally it doesn't have a significant deviation. I think 205 is high enough. If I send the order out, they will block me to maintain the trade. It blocks me only $6,000. So let's say if I collect $1,000 credit divided by 6032, that's 16.5%, 16.5% return on investment. So let me take a screenshot of this one so I remember the margin that blocked me. All right, so I send it out. Now it's in the queue, right? But of course, because it's a high liquid stock, I need to reduce the price gradually to get it filled. The mid price is 201, so maybe I got it gradually 204, and then 203, and then 202, which is the bid price, and then 201. I think I will got fill at 201. That's the mid price, and now mid price 2, right? So let 201. Okay, so leave it there for a while I'm checking the Nike order again. Nike, with the price going down, I think price is now going down 47 cents. I need to reduce the credit a little bit to get it filled. I think 2.92 is still fine, because remember, if it goes higher before the expiration, the trade would still make some money, some money. So I probably need to reduce the price, this one, a few cents to get it filled, right? So I go back to the IBKR here where I placed a trade order already. So I need to reduce this one to, let's say, 295. Oh, the Google is now being filled. Yeah, the 5 contracts of Google trade has been filled here at 2.01. The Nike, I need to reduce a little bit to 293, maybe a little bit more, 292, 291. 291 is being filled. Okay, 291 is being filled. One contract already being filled. The other contract is still on the queue. Okay, leave it there. It will be filled soon. So it's fine. So the 3 trades that I have today, I simulated both on Thinkorswim and IBKR. I use IBKR to enter the trade because of 2 reasons. I got a better margin, capital to be tied up in the trade, hence higher return on investment. And the number 2, what is the reason of the number 2? Number 2, because this is a credit trade. So I got the premium upfront, and that cash that's sitting on my account would earn me extra income, which is the interest rate. Interest that the broker pays me. So it's a double benefit for me. So I'm still waiting for my position to generate profit for me, and I'm paid to wait because the trade has a positive theta. At the same time, the cash I collect upfront will generate extra income for me at the same time. So many streams of income on the same trade, right? So you understand the power of the option. You can make different incomes out of the same trade, right? Depends on how you use or construct the trade. I love credit trades in this particular environment because you collect the cash in advance, and that would have extra benefit from the higher interest. All right. So let me continue because I think I need to finish a few slides before I have the event that I cannot miss that I told you at the beginning. All right. So now let me recap the exit rule, right? Exit rule, 3 scenario. If the price stays within the profit zone here and the time's running out, the pink curve will rise and it will generate profit for you. And I will take profit when the trade generates at least half or better 2/3 of the max profit, right? Especially when it comes early. Scenario number 2, if the share price drops, I would be ready to cut loss, right? Cut loss when it drops below the short put strike or not later than the break even. So that's the scenario number 2. Scenario number 3, if the stock price rallies very strongly and going outside the profit zone on the upside, no worry. We will still making some money, small money in that scenario. Yeah, so in that scenario, I would close the trade early because the longer I hold, the less profit I would make. Just close the trade, release the buying power or margin for a new trade. All right, just a little bit on the testimonial that people talk about, right? Isa, again, benefit a lot from our option community here. So Isa say up to 45% drawdown in 2022. I'm glad to present my performance this year with tons of thanks to Adam and Bang whole team for the cost in the community members. And I also started trading option in January this year. And I can say that this was the real booster for my portfolio. I'm still the beginner, and I'm sure I become better every day since I'm learning and practicing almost every day. So ISA got 39% year-to-date performance, way better than the S&P 500. David sent a note to in the Discord channel. Thanks, Adam. And okay. By the way, the second contract of the Nike has been filled as well. Sometimes you just need to be patient. It's there, filled. Yeah, 2 contracts. So 3 contracts in total. 5 contracts for the Google and 2 contracts for DG. Sorry, let me go back to the slide. So David sent us a note. Thanks, Bang and Adam and Bang. Started option course in June 2022. Here's my result, and he had made very consistent profit every single month. This is Suren again. I showed this one the other day. Suren keeps selling option and collecting credit and cash, and he shares selfishingly on the Discord channel on his result almost every month. That's very well done by Suren. A lot of premium he had collected. Again, a very quick snapshot on the program or the courses that we are offering here. Level 1, where you start at 0, you know nothing about option, no worry. Adam and me will be there to guide you through from the basic concept to very basic option strategies, and then build your skill up from there. So it includes, number 1, basic concept of option trading, how it works, setting up the chart trading tool, understanding what is call option, what is put option, how it works, generating. And now if you already own a portfolio of shares and you want to boost your income, you can sell cover call. When the market is overbought, you think the upside is limited, you sell cover calls to get extra income while you're waiting for your shares to go even higher. Hedging portfolio with protective put. For example, if you are worried that stock price has run up so much so fast, you want to protect a short-term potential drawdown or retracement, well, you can protect your portfolio with the protective puts. Lesson 6, how to sell cash secure put to get income on the regular basis. This is what Adam have talked on the day 2, and he had made a few $100,000 in this year and last year as well by just selling cash secure put. I did this one as well. I tell you, it's a very high probability trade, and the beauty of the high interest rate environment is when you sell cash secure put, you collect cash in advance. That cash also generates extra income for you. Bullish strategy number 1, lesson number 7, where we talk about bullish strategy using spread, vertical spread. This strategy caters very well for those with smaller accounts. So when you start trading option, you don't have big account, you want to test the water first, you have like $2,000 or $5,000 to start with. Well, this is a very good starting point for you to use these strategies because it uses very low capital and you have a significant upside potential. So bullish, so that's vertical spread. If you are bearish on the direction, you also use the vertical put spread to bet on the downside direction as well, also using less capital. And the cash flow wheel, for those who have a portfolio of stocks or you want to build a portfolio of stock at the discount, you can start with cash secure put, circling it into shares and then sell cover call, and you keep doing it to generate extra income while you're honing on the good stocks. So Adam has very good good lessons on this one. You definitely cannot miss that. Now, not just those 9 lessons, but we also have 2 bonuses. Number 1, we have the bonus on the technical setup, the basic part, the technical analysis for you. And number 2, how do you trade, how you set up your trading station, right? So that's for level 1. Now, beyond the level 1, the basic concept, the foundation part, we have some 15 different strategies at the advanced level. I'm going to add another one, which is Trade Wizard, which I just showed you, will be on top of that. And Adam and me will be there. We took turn to teach you different strategies. And those are the ones that work very well for us and many community members as well. So we start with the introduction of the advanced options course, and then credit spread, how you sell insurance to collect premium but get protected at the same time. The concept of selling premium, selling insurance and buying a reinsurance to protect yourself, so that in the worst case scenario, you won't lose your shirt, right? You have the predefined max loss for your trade. You won't lose more than that. So it's the beauty of doing the insurance selling business at the retail level. So you can, it's kind of your own business. Yeah. Iron Condor, where you don't need to pick a direction of the stock price movement or market price. As long as the stock price move within a range, time decay works in your favor. You can make money when you are sleeping, when you're on vacation, or you're on weekend, doesn't matter. This Iron Condor is very powerful strategy for you. You don't need to pick a direction also. Now, if you want to play earnings, we have two set of strategies that allows you to play earnings with a predefined risk. So you don't have to face with a significant risk, even when you are wrong on the earning price movement direction, right? Starting with earning probability spread. This is my proprietary trade strategy that I created, and I make a lot of good trade on this one. So very interesting, low cost, high probability, and good return on investment as well. We have diagonal spread for those who want to do cover call but cannot afford to buy 100 shares or few hundred shares to sell call. You can use diagonal spread as a budget cover call or poor man's cover call. So you use a fraction of your capital as compared to buying 100 shares. So this one you can do cover call, but with much less capital. And because of that, it will boost your return on investment many times over. Long calendar spread, again, this strategy, you can construct it as neutral trade, bullish trade, or bearish trade. I usually use it as a neutral trade. And I enter it when IV is low. I get the cheaper price. And if the stock price doesn't move a lot, I could just generate money because the trade has a positive theta. Time works in the trade favor. Again, concept of you are paid to wait. Synthetic long or short stop. Now, this is the strategy which is very powerful that you can use to go long or to go short on stocks without having to use a huge capital. A typical synthetic long strategy or trade would block you only 1/4 or 1/5 of the stock value. So you don't need to have a huge account to short a stock or to long a stock. This one, it's a leverage tool, and you don't have to pay interest rate for the leverage. You don't have to face with the time decay for the trade. So it's just a leverage tool for you. And many of our members have been using it to benefit when they ride the uptrend of the bull market. Protective bullish synthetic, or another name called Boomba. This is a strategy I created with similar to holding shares, but with a protective put. So that will protect you in the scenario when the whole market collapses or the stock price drops a lot. It caps your downside risk, like you buy an insurance for your stock, right? And the beauty of this one is because of the protection there, the broker will block you a very little capital, and you have unlimited upside. That would translate into a huge return on investment, right? So this one you cannot find any elsewhere. This is something I created. SnapX, another strategy I created on trading on SPX advanced level, and generated a lot of money for me over the past 4 years since I created that one in 2019, right? Psychology. Now, then we realize that trading option is not about strategies. That is only one part. More important part would be how to manage your psychology, the risk management, the emotion, and the ego go with that. I mean, it's easy to say it and done, right? You have the plan, but the harder part will be how to stick with your plan. And that is psychology and risk management that we teach on the program. Also, we talk about how to build a portfolio for yourself using option that generate income for you, even when you are on vacation, like I am today. So And then because we have so many strategies, we'll have a summary for you on what strategy will be used in what scenario. Okay, so that it make it clear so that you know when to use what strategy. And then Adam and me, we kept adding new strategy from after that, right? So 13, we added the back ratio spread when you can have unlimited upside and you have limited downside. And even stock price drops a lot, you lose nothing, right? So it's very powerful strategy as well. Earnings sniper spread, as I mentioned, I have two sets of earning strategy, earning probability spread, and this now the earnings sniper spread, which I created as well, and we also benefited a lot from it. Bull push spread extreme, this is the strategy that Adam created, and he's been using it a lot and making a lot of money. This one, you have extremely high probability of winning. That's why it's called extreme, right? 90% plus, right, of probability of winning. And then I created another version of Snipe, but this is for B. For B means for the beginner, for beginners. For those who just started out with smaller accounts who want to test the water for Snipe, you can do it with Snipe for B, and that uses less capital and have a good return on investments as well. Just quick one, Hannah make lots of money, you know, using Snipe strategies that I created. Similarly for Bagus, he make 56% profit from Snipe alone. And David got 35% profit from the first full month of trading Snipe strategy, right? Continue. As I mentioned, we kept adding new strategy in. I created this is not my own one, but the caller strategy is out there, but I teach the caller how to buy a protection for your stock at a free cost, right? So you sell a higher call, use that call option premium to protect your downside risk. So when you hold a stock or portfolio of stocks, you may want to do this one. You get a protection for free. Boombank caller strategy, you know, the Boombank strategy I mentioned earlier, it has unlimited upside potential and it has limited downside, right? The one of the disadvantages is it has a negative theta, meaning time works against the trade. So that's why I created this Boombank caller strategy that turns the negative theta into a positive theta. That means you are paid to wait. That means the trade would make money for you whenever you are, on vacation, on holiday, or during the weekend. So you are paid to wait. That's the power of the option and the power of time decay when you are the seller of the option. Well, at times the trade could go wrong and how to repair it. So I have the full set of videos, different ways to repair a trade that goes wrong. Now, this one, people asked me earlier, right? Would this one be a sign? Would it be not a sign? I told you, nothing to worry. Once you get, you've been in option trading for a while, you know that option assignment is very normal. And more often than not, that would be a good thing for your trade if you are the seller of the option, right? So you should be happy, not even worried. Yeah. Now, my trades normally require some rolling. Now, Trade Lizard doesn't require any rolling. You stop out or you take profit. That's it. But multiple strategies that we taught in the curriculum will require rolling, like calendar spread, like diagonal spread, like Boombank collar. Then you keep rolling option to collect more premium and make the trade even like more positive theta, time works in your favor. There are different ways of rolling options, and I put up all kinds of scenarios for you to learn in what scenario you need to roll option to what, right? It's a little bit balance between science and arts. Right? Depends on your thesis on the price. You could roll in different ways. So it's very interesting videos that I put up there. Last year in this venue in the black market, I introduced the crouching bull, CBS, and that has been a big contributor to my portfolio performance this year. And I showed you 2 days ago. Here to that, I got 70% return on investment across combined 5 accounts, right? In one of my main account, I even more than double the account balance, and mostly driven by the crouching bull, which should work very well during the bull market. So that's what I introduced last year. Now, because of that, take advantage of this year when I introduce a new trade lizard strategy that worked very well for me over the past 6 months, right? 87% probability of winning. I mean, that's win rate that I have achieved so far. So yeah, here's a few more testimonial. This Asankar. Hi, Master Bang, Master Farm, Bang Farm. Good afternoon. Good trust you doing well. Thanks for your very good call on Amazon EPS, earning probability spread. That's the earning play that I mentioned earlier. I too make 200% return on investment. I made 200% return on investment in that trade in a few days time. And Asanka also make the same. And some of my students even make more than 200% return on investment on that trade. I remember I took the profit early. Some of them took later and get better profit. Tommy also say Eco pick up, picking top 1% stocks that are undervalued below intrinsic value and have achieved 34% year to date, using mainly BSS, CPS, CC, BPSS, and CBS. So different, there's the acronyms of our strategy. For example, this is like Kasakyo put, this is a Covacon, this is a boom push spread extreme, this is a couching boom, right? Thanks to Bang for his amazing coaching skill, right? So, across the board, you see community members talking about how they have performed well this year due to the option strategy that we taught there, right? Samsung, these guys have delivered outstanding result. By incorporating options trading into my strategy, I have not only recovered on my previous losses, including costs and subscription fees, but also achieve a decent profit. Now he's talking about a decent profit of 300%. So make my 70% return nothing, right? So my investment and trading journey would never have been as successful without your constant guidance and invaluable lessons. Here's my portfolio performance to date. Well done. Gumit also wrote to us, thank you, Bang Farm. I completed the last video from the October 4th. This live trade hunt after the 6th wave, right? It's very informative to provide great analysis on today's market trend. You are a great mentor, helping us all in every step of the way. Your reasoning for taking trades is very affirmative. Thank you for the recap. Option Striker level 2 and Option Shelf level 1. Both are very impressive courses. Thank you for your teaching. Toby wrote to us also, Bang Farm, thanks Master for sharing your wisdom. Yesterday, I entered Boon Bang on PayPal, up 120% on my best decision to buy on courses from Adam back in 2019. And he talked about the OTP subscription service that I mentioned earlier, and he said he will subscribe for it soon. I'll talk a little bit when it comes to the next few slides, right? So he said this is the only thing I can give back for you and your coaching community. Thank you, Toby, for the support. Alessandra also talked about, the amazing course. I took the option 1 and 2, followed by Well Academy, and both are really amazing. Well Academy gave me confidence that the live lesson with Bang are something that changes the way to look at options. I have made back every single dollars in 2 months' time, right? So that's Alessandra. This is from Rashid. He said, we are grateful to be part of this community. Adam and Bang have given us lifetime tools to achieve our financial goals. We are forever indebted to you. Thank you, Rashid. Pavan, again, this is very emotional and touching note every time I read this, right? He said, I started my option journey actively from June 2020, and it has completely changed my performance. While there has been ups and downs, which are normal, the overall returns has been very satisfying. I do very highly recommend to all students to take the option course. It's a game changer. Adam's swing trading strategies with his and Bang's options strategies together are phenomenal. I still have a lot to learn, but I'm enjoying this journey of mine to get financially independent. What better can it be if you get paid to enjoy what you are doing? I remain indebted to Adam and Bang for their contribution in transforming my life. Feel lucky and blessed. Thank Bravan for that. All right, so we're offering a very special 75% off for the option for on courses and playbooks, right? If you sign up for the option trading mastery package, you get the bonus number 1, which is the trademark trading tools, which is worth $800, right? Trade tracker, quick preferences, and EPS summary sheet, such etc. And then you have a bonus number 2, which is, for me, it's very valuable when you have a lifetime access into the option traders discussion group on the Discord, because you cannot just learn alone. You need a community to guide you through, because this is a venue when you can ask any questions. Adam and me and the coaches and the senior members and lots of members are there. And Adam and me, we are there like checking every single day, 7 days a week, 18 hours a day, except when we are sleeping. This one worth $1,200 a year. Now, with all of that, right, level 1, level 2, the bonus 1, the bonus 2, total value of the cost bundle is $8,000, $8,076. And normally we offer to the public with the unpromotion price, $6,076 US. Today, it's a special day. We offer the cost at the super discount, 75% off. So you got the price at only $1,519. Wow, it's just a fraction of the normal price. And I would urge you to take action, a massive action here, to take advantage of this offer and make a lot of money for yourself. I mean, last year people get benefit from the crouching boon that I introduced a year ago. I tell you, trade lizard in a few trade, I mean, high probability of winning, no guarantee, but based on my track record, you could make back the price here, the fee here quite soon, right? Now, if you sign up, the earliest sign up people will get extra bonus, which is fast action bonus here. That is one webinar with Coach YY. He's a resident coach in Piranha Profits. He's a trader who are very profitable as well. I think he doubled one of his account and the other one he got 50%. And he has a one-on-one coaching with some of the students, and all of them has a very positive feedback on his coaching as well. So he will have one webinar for those who sign up early, and that is worth $300. And the webinar will help you to have the jump start in the option trading journey, right? And you can get the replay unlimited time, right? It's a 3 hours trading coached by YY. Yeah. Now I'm going to talk a little bit on my option tactics playbook, or OTP in short, because lots of people ask, what is it, right? So this is a separate one from the mastery, the option trading mastery package. This is the subscription basis that you need to pay to join another community where you have a different Discord channel. It's not the same Discord channel as the main one. This one is for OTP members only, where I will show the members my trades almost on a daily basis. I mean, minimum a month I have 2 trades, but often people know, who've been in the community know, normally I takes about 8 to 10 trades a day, a month. And not just enter the trades, but manage the trade throughout until the closer, right? So it's important for you to know the whole process of entering the trade, managing the trade, preparing the trade at times, taking losses or taking profits, and then manage the whole portfolio and diversifies the portfolio at the same time. So this is the venue where you see my actions, very active. In fact, today after this webinar, I need to go back to OTP community to check if I need to take any actions on my trades, and I need to post it there in the channels there. So this is a very unique service that I'm providing, and I'm there in the chat every day, right? It is similar to Adam's UIP, which is Ultimate Investor Playbook, which is for investment. This is for option trading, right? So take advantage of this offering because you would have 12 months of the premium newsletter. Every month I have newsletter, I have a website where I have newsletter, I have a tracker, I have a watch list, right? So the newsletter will be published every single month. And normally it's a long one with different trades, review the own trade, review the open trade, and analyze the new trades. So normally that's how I cover together with the market updates and all of this inside. Sometimes I teach new stuff inside the newsletter as well. Now, not just the newsletter, but you also have the access to the Discord channel for the OTP community alone. And you see here, this is an example of my notification of my trade. What is the trade, the date, the setup, the execution, the P&L chart, the risk management, very long one. Every single trade, even the rolling one. I have the full write-up of the structure, trade setup, price, execution, leg by leg, and then P&L chart, and then risk management. Always, I need to go do it in a very proper way. So this one alone, $1,200. And then I have in my OTP website, I have a portfolio trackers where I update the performance of the open trades and the close trade every single day. Every single day, I post the new update of the trades, each trade, how they are doing. Any trade needs some actions anytime soon. So you have the kind of daily update from the tracker that I have there in the website. It's also worth $1,200. Now, you also have the watch list where I have the few watch lists, the trades that I'm planning to enter in my watch list. It's in there in the website as well. And then not only on the channels where I post my trade, we have another channels for OTP members, right? Where OTP member can ask me questions or they can discuss different idea or discuss different things inside the channels. And this is uniquely exclusively for OTP members only. Again, it's not the same as the main Discord channel for open for the mastery option trading mastery package, right? That's a different one. This is for OTP members only. Now, if you can put all the numbers together, right? The 12 months for the 12 newsletter plus the notification channels plus the discussion channels plus the trackers plus the watch list is $6,700. Normally, if not in the black market event, we offer at $2,500 a year, about 200 plus a month, right? $2,500 a year. But again, this is a special day when we offer very steep discount if you buy it as a bundle. The bundle includes the mastery package, remember, level 1, level 2, bonuses, and jumpstart bonus as well, the tools, everything there. And then my subscription business, option tactic playbook, with the newsletter, the notification, the chat group, dedicated chat group, and watch list and trade trackers, everything inside. Yeah. If you buy it as a bundle, I tell you, it covers everything, right? You can learn the theory part and you can practice using my OTP service where I show you the data, the trades on a regular basis. And if you buy everything, that will be 65% discount. And combined, the two will be $3,000 plus $3,000, right? $3,106, right? So take massive action here. That's the lowest price or steepest discount during the year. Now, just a little bit on how people talk about my OTP service. So this is from Rachel. Recently, Rachel wrote to me or in the chat group. Thanks, Bang. I really like OTP. Best product ever. I feel I can learn about options without try and error myself and lose money consistently or blow up. So I feel OTP is a really great product with you, such a responsible teacher in ensuring risk management also. That's what I don't know how to spell correctly. Rachel, right? And then another member replied, truly agree, right? And Rachel also mentioned, I think I definitely love going to restaurants and let the chef, which is me, cook for me and curate trades menu, right? So that's the concept of restaurant. I cook the food, and I serve you. If you like the food, you eat. If you don't like, you skip, right? So same concept of the UIP that Adam been doing, right? So people really love it. Toby, again, this one I showed you earlier, and he said because of that, he's going to subscribe for OTP soon. Another one, also same ratio. Okay, so she said, anyway, I really enjoy OTP subscription. Bang Farm guidance, I think it's really one of the best out there. Bang is so humble and always helpful, patient to reply every student. I always do my best to reply every single comments that you have there, unless it had been answered by the coaches and other members. If I see I see the need to elaborate, to explain more, I would do, right? Even when I'm on vacation. Again, if you subscribe to the bundle, not only 12 months of the subscription of the OTP, now you get extra 2 months benefit, right? So instead of getting 12 months, you get 14 months. So 2 months bonus on top. And that's at the same price. So you get 3,001 for both mastery package and the playbook at the same time. So take this massive of actions and so you can sign up either with the trading mastery packet alone or the bundle with the OTP subscription service, 14 months, right? And then I don't think we need a break anymore. I already have the break. I just leave it here for Q&A. And then while I'm having your questions here, I will leave the QR code there for you to ask to take a screenshot or get information from the offer. So let me get into the Google document here where question get pushed to me. Let's see. All right. So where's that? Let me get the Google document here. We have the Google document here. Wow. Okay, I have quite a few questions. I need to do it fast because it okay, my sister actually waiting. Anyway, let me finish it one. SK Tan, what is the distinct between what is the distinct difference in deciding which strategy JL versus crouching to use? Okay, JL, remember JL, the best scenario would be when the price like moving nearby the entry point, not going up so much, not going down so much. If the price goes up so much, you will still make profit, but the profit will be less. Crouching bull, on the other hand, if the price goes much higher, you will max out the profit. The trade would achieve the max profit if the price goes up a lot. So that's the key difference of the two. The second difference is Trade Wizard has a wider profit zone, often like 70, 80, or even 90% probability of winning. Crouching bull, normally you get like 55 or 60%, right? Lower probability of winning, narrower profit zone. So that's the two differences. And crouching bull is meant for long term, 6 to 9 months, right? This one is like 2 weeks, right? Fast in, fast out. You can recycle your trade very fast. All right. Question number 2 from Park K. What's the risk of over trading Trade Wizard on the fundamentally strong companies which we want to hold forever? Now, if you have ability to hold shares or to buy on the shares from the Trade Wizard trades, it's okay to overtrade. In that case, I'm not calling it overtrade. If you have enough cash or capital to take up shares in the worst case scenarios, because you say, okay, it's a good price anyway, like deep discount, I don't mind owning it, then there's nothing wrong with that. You can do as many trades as you want, as long as you have enough cash to take up the shares. Now, when I say overtrade, I mean you trade more than you can afford, right? You can you should avoid that situation, right? But if you have the cash to take up shares in the worst case scenario, I would not call it overtrade. Vedat asked questions. In most countries, unlike Singapore, which does not have the tax over capital gain, that's true. Singapore has no capital gain tax. So in most countries, one needs to pay 30 to 35 tax, the 30 to 35% tax, even on premium that are collected from each leg of the option trading and on final gains. Does the strategy introduced by Bank Farm would be profitable in other countries where you need to pay 30% tax on premium? Now, I'm not a tax advisor. I cannot comment on that, but you're right. I mean, for those countries that tax on the capital gain, your after tax will be less, right? But if you trade something else, to trade stock or trade other strategy, you also need to pay tax in that scenario, right? You may have less tax or more tax, but you still need to pay tax. Even if you invest, you also pay tax, right? So it's really very unique on your individual situation. Yeah, I'm lucky. I'm in Singapore, so I don't have to pay tax, but I can understand your concern, right? So choose the strategy that help you optimize the after-tax income. That would be best. It may not be the trade result. It could be a long-term strategy. It could be something else. It could be investment to optimize your tax. I'm not an expert. I'm not a tax expert. I cannot comment on it. But we have something like 20 strategies. You see which one will optimize your tax. Then you stick to it, right? Check, ask question. After taking profit, do you apply trade result again on same stock or current price? Every trade before I enter the trade, I need to do the full set of due diligence, even the same stock. If I want to enter the same trade on the same stock, I need to re-simulate the trade, check the fundamental, check the technical, still like the trade profile or not. In my 258 trades I did in the past, I recycle many times the same stocks, right? The same trade, but in different time frame, right? Or different period. Yes, so answer is yes, you can do it, but every single new trade, you need to do your proper due diligence. Hannah Farm, okay, you ask, dear Mr. Phambang, do you think it's a good, is it good to enter low trade result today, aiming to get shares? I did simulate trade on low. I could not find a good trade because the strike price is like $5 per step, so it's not ideal. I did this one, but I could not find a good trade. But if you don't mind, you can do it as well. So for example, this one, if I want to today, low is dropping $5. Okay, now if I do a quick simulation, I will sell the 23. I mean, I don't have 25 here, so then 23, sell this. And then I sell 45. I don't have 45. See, there's the steps here, $5 each. So I could not choose somewhere in between. I could not get the best optimized trade. So I need to go to like 36 and then $5 above. See, for $5 spread, I get only 3.36. I could not get a good trade on low. But if you're happy with 332, that's fine. But the only problem is if you do this, the trade would have some small loss zone here, and that's not ideal, right? So in this case, probably you use couching bull, because that one, if the share price get lower, you get assigned, you own the shares. So maybe trade is not the best optimal strategy for the case of low, right? All right, so let me switch back here a few more minutes and okay, let me switch back here. All right, so let me leave it here. Continue. Few more questions. I have it in my list here. So Po Chuan Chua asks, hi Bang, for the trade result stock selection, do you also need to look at IV for the stock at the point of time? As I said, IV will have an impact on the trade. So if like for Dollar General, if the IV is high like 90%, that would be a better entry point. So if you look at the IV before to enter the trade, go for the high IV. right? I don't look at it now, but it's a good idea to check the IV. But that is just the gauge to tell you whether you would have a good profit or not, or go a good premium or not, right? As long as you have that like premium greater than the spread of the call spread, that's fine. And high IV or low IV just is an indicator to tell you whether you could get it or not. So it's better to check it. Yeah. Justin asked, the bid and ask spread for DG options are very high. Would you still make sense to trade it? That's why, that's why the pricing of the DG, the dollar general trade that I entered earlier, it was very wonky because the bid and ask is relatively high. Yes, ideally, I would prefer to do it on the tighter bid and ask or higher liquidity stock options. DG is not one of them, but it's okay. I got what I want, right? I got like, I remember 4.1 or something, still okay. So as long as you get at the price you want, that's okay. Sometimes it takes a longer time to get it filled, but for me, it got filled. So I'm okay with that. Tendo Negu asked question. Hi, Bang, have you ever traded option during the non-farm payroll or FOMC? Yeah, okay. Okay. Have you ever traded option fund during the non-farm payrolls or the FOMC? I mean, selling puts in stock that falls severely, right? So what I think, what I understand from your question is that during the non-farm payroll and the FOMC meeting, when the Fed talk about their rates hiking decision or cutting decision, the market tends to move a lot, right? Now, when you talk about selling put in the stock, you must be comfortable holding the shares in case the stock price drops a lot below your put strike and expires. So that's a premise of the trade. When you sell a put, you need to be ready to take shares in the worst case scenarios. So in that scenario, doesn't matter FOMC or non-farm payroll, whether the stock price goes up and goes down, doesn't matter. Be ready for the worst case scenario. Then just ignore the news, right? Yeah, I trade stocks and I trade a lot of options before and after non-farm payroll. Normally, it's not an issue for me. So tell SY, can you show JL on Amazon? I think I looked at the chart for Amazon earlier, right? I think the price is falling very sharply today. I need to understand what causes the price dropping. I think technically the stock price could continue to drop a little bit further. As I said, I mean, normally when stock price drops that much, normally there's some news, and I need to see if that news would severely impact the stock price in the short term or not. Then I would wait. For Amazon, I was having an idea to do it today, but given the magnitude of the drop today, I need to check what is causing the drop, right? Okay. Buchu or Bocho say, can we do this strategy on NVIDIA? Now, NVIDIA is going to have the earnings after this hour. You can do it, but NVIDIA has a history of moving a lot after the earnings. So again, this strategy won't bode well if the stock price moves up a lot or down a lot, right? You could still do it if the profit zone is wide enough. In fact, I think I simulated one trade on NVIDIA before, and the profit zone is huge. If the break-even point is the price that you don't mind owning NVIDIA, then go ahead. Yeah, I think I can do a very quick one here. If I do NVIDIA right now, because the earnings coming, you could have very good return. You could have a very good profit zone. So if I sell 25 delta put here, 455, which is about 40 points below the current stock price, and I sell 45 call, and let's say I sell 530. Yeah, so 530 means I have 15 points here and I have 17 points here, so it's good. It's greater than the spread, but instead of getting 17, I will push the put down further to 450, right? I still have a little bit more room, so maybe I sell a little bit lower. So this could be a trade, right? Could be a trade that you want to enter for NVIDIA, right? So let's look at the P&L chart. And this one, move it to the expiration date, which is December 30th, and set slices of break-even point. And so look at this. If this one move to here, so there's no risk on the upside. So this trade, you have about 89% chance of winning, only 11% chance of losing. Stock price needs to drop a lot for you to hit the break-even point here, which is about 60 points below. Now, if you say, I don't remember at hand what's the valuation of NVIDIA, I think it's overvalued, I would avoid it. But if you like the stock and you don't mind owning NVIDIA at this price, go ahead. But I think it's overvalued, so I would skip it. LK Tay asked question, is the starting point for the long call always at $2 higher than the short call? Depends. If you trade the smaller price stock, it could be $1 higher. If you trade like high price stock like NVIDIA, it could be like $15, right? You need to try and error to see which one give you the best optimal price. For last question I have here from Andrew Cole. For trade lizard strategy, is there any risk if ROI is less than 10%? There's no risk, but because remember, you take profit early. So 10% in the best scenario, that means when I cut and I take profit at half point, I get 5%. I just thought 10% would be somewhere like worth my effort. If I settle for such a low return on investment, it's just a little bit not worth on the effort I'm putting here. You can go for the less than 5%, but that translates into less return on investment. If you're still happy with that, go ahead. But for me, 10% or more, that would be my criteria. All right. I think I have answered all the questions here. And if there's still questions left, my the coaches and my team there will be answering your questions. And I need to run. Sorry for a little bit resting here, but I really want to talk a little bit more. Now, I'm looking forward to seeing many of you in the community, and the OTP community together with me, where you see my live actions every single day and week. And then just stay tuned for tomorrow, right? Tomorrow we have Alson. Okay, so Alson, we have a live trade hunt like I'm doing today, but for his price manipulation actions, trades that he would do tomorrow at the same time at 9 p.m. Singapore time, and about the same time I'm doing right now, but for tomorrow. So please tune in for tomorrow to see another way of trading from expert Alson. And that's it. I wish you the rest of the day. Rest well. And for those who are in the morning like me, have a good day. And I see you in the community. Thank you.